गुड इवनिंग, गुड
कैसे हो?
इवनिंग।
कैसे हो?
बस फाइन। कैसे हैं आप?
बस we all are doing good. The angel is at home.
Yes, yes.
चलो, great, lovely, lovely.
So once Chairman sir is here.
Just
Sir,
2
I'm here
minutes.
only. Yeah, I'm here.
Arey, sir. So
I was there, I was
your
waiting for-
permission, your
Arey,
permission,
sir,
your permission.
We'll start now. We'll start on time. 4:30. We
Yes,
can
yes.
start now. Yes, yes.
Yes. Vaithi sir, we are going to start, right, sir? And Yash will going to share your presentation.
Yes.
That. Yes.
A very good evening, faculty. For today, Advocate K. Vishwataran ji, Chairman Ahmedabad Branch CA Harit Dariwal, Vice Chairman CA Bhishan Shah, Managing Committee Member CA Rahul Maliwal, senior members, and my dear friends. I hope you all are safe, and I pray that all of you remain safe. Beginning with this session, I would request Shehzad Bhai to play ICAI motto. Request all to put their right hand on their heart for ICAI motto.
य एष सुप्तेषु जागृति य एष सुप्तेषु जागृति कामं 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 कामंशो पुरुषो निर्मिमाणः निर्मिमाणः तदेव शुक्रं तद्ब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चन एतद्द्वैता 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 एतद्द्वैता।
Thank you, Shehzad Bhai. Once again, welcome back. Request Chairman Ahmedabad Branch CA Harit Dariwal to give opening remarks.
Thank you, ma'am. Respected faculty for the session, Vaitheeshwaran sir, who has joined us from Chennai. Vice Chairman Bishan Bhai, Secretary Anjali Ben, Managing Committee Member CA Rahul Maliwal, and all the dear participants who have joined the session. A very good evening to all of you. So I think a wonderful session today has been planned by Bishan Bhai on the two very important topics, the input tax credit as well as the how to take advantage of 2A 2B returns. So I'll just, I will not take much time on the topic because that is up to Bishan Bhai to introduce. I'll just tell you something about the branch events. We have basically started with very important blood donation and plasma donation drive. So blood donation drive, today we had a blood donation camp at our branch, but the drive is still on. In case anybody wants to donate blood, you can let us know in the Google form. The Red Cross van, they will come near your house and you can get the blood donated. We also have a plasma donation drive going on. I think it's a need of the hour. Though this is something which we are really appealing that in case you are fit to donate plasma, please come forward and do it. We'll be basically very happy to have you donating plasma. Regarding the events, I think we have a very interesting session next Saturday coming up on the NR taxation. When we have non-resident taxation, especially on the residential status, the issue that we all are facing, and on the SCP, the significant economic presence that we recently announced, amendment announced that basically is happening on next Saturday. We have a women refresher series going on. So we have 4 sessions as of now. Remaining 16 sessions are there. A very, very well planned series by Anjali Ben, a very interesting series for all the women chartered accountants. So please take advantage of that. Apart from all these technical events, I think as far as the COVID care is concerned, we at Ahmedabad branch are providing various facilities. First is the food kit distribution at your doorstep. Any one of you, even non-members want the food at the doorstep, we have this facility wherein we can connect you with the caterer. We have this the car facility. Now, this is especially for the COVID patients. So any member, any family member or any student, in case is facing this issue, the COVID positive patient, we are arranging this car facility wherein they will pick up from your house in case you go for a test report or to doctor consultation, whatever you go for 2 hours, 3 hours, we'll be providing the car facility to you. We also started this medicine at your doorstep, wherein we have a Vikasa army. Even the chemists there basically will be delivering medicines at your doorstep, whatever you would require. So we have a separate links and separate Google forms for all the initiatives. So please do visit Ahmedabad branch for the further details. Apart from these initiatives, I think one thing again we want to stress on the Movement 73. It's a wonderful initiative of Ahmedabad branch, very big health and fitness initiative where more than 54 branches of our country have joined in, and we have more than 2,300 participants from across the country who are joining us live every day for some physical activity. Like Monday we have Zumba, we have yoga sessions, we have senior member sessions. So entire week is packed like that. Tomorrow Sunday we have a super Sunday wherein we have one intense workout and one doctor talk. The doctor talk is basically on the importance of Ayurveda and also on the importance of sleep. So these kind of sessions we are going to have regularly. So in case you have not registered for the Movement 73, I would request all of you to do that. We all are actively involved in that, and I'm sure this current difficult times, this is something which we all should be really focused on. With this, I once again thank Bishan Bhai for a wonderful session that you organized, and thank you so much Vaitheeshwaran sir and the other faculty today who will be joining for taking our invite and sparing your valuable time. Thank you, sir.
Thank you, Chairman sir. Chairman of the branch, C. Harit Dhariwal, and we all managing committee members are illuminated due to his determination, his dedication for the endeavors of the branch members and all the students. So, sir, we are thankful to you that you strive us to do better and better. You keep us asking that Bishan bhai ye hua ki nahi, Anjali ma'am ye hua ki nahi, Rahul bhai ye hua ki nahi. So definitely we are trying our level best, but it's all you on whose direction and vision we all are doing and performing. So thank you very much, sir. Anjali ma'am, thanks for those nice starting of the event, and Rahul bhai, thanks for, though you are busy, I can say, in your family matters, but you have given your time, precious time to for this meeting. So thank you very much. As the topic in the, input tax credit, and we all are learning that topic since, I guess, last 3 to 4 years, and we are also thinking something and other. Every time we see input tax credit, we are grateful to our officials who are able to come new issues for all of us. Because what happened that when GST audit was strike out, I was thinking that whether we are going to perform a practice of GST or not. But friends, with innovative ideas of tax officials, we are definitely going to do best and to perform a great. And for that, we have a booster dose of vaccine with Vaitheeshwaran sir, and I'm sure that you all your issues related to input tax credit in GST will resolve with this stalwart faculty of today. Now I request CA Divya Soni to introduce our learned faculty of the day. Thank you.
Thank you, Bishan bhai. Continuing the gratitude you have expressed, first of all, I'd like to thank Chairman sir, Anjali madam, you yourself, sir, and all the members who has made this possible. And because of you guys, we are having sir over here. Sir has obtained law degree from the Madras Law College, and he has enrolled as an advocate in 1990, I guess before birth of all of us, majority of us. He also has obtained a CWA and ACS degrees from respective forums. His legal firms operates with physical offices at Chennai and Banglore, and he provides services virtually across the country. He has over 30 years of experience in advisory capacity as well as through appearance before appellate authorities, tribunals, and courts in matter arising under domestic and international tax laws, excise and customs, service tax, VAT, CST, GST, PEMA, RERA, company law, and IBC. He wrote the first comprehensive book, VAT in India, when VAT was introduced in 2005. and has also authored books on Sanvet credit, books for students appearing in CA final examinations. He has written hundreds of articles covering variety of issues in tax, corporate law, constitutional law, and general laws in both print and digital media. He has recently authored the book Taxation of Digital Economy, published by Oakbridge, covering international taxation and indirect tax aspects of the digital world. He is considered a specialist in tax and legal matters with the in-depth knowledge of the business and tax laws. He has addressed hundreds of seminars and conferences on law and taxation across the country and abroad, and is most sought after legal professional in GST and business restructuring matter. He is an expert in real estate contracts and has recently forayed into technology law and artificial intelligence. He advises clients across the country on various verticals such as manufacturing sector, retail, healthcare, food and hospitality, gems and jewelry, media and entertainment, information technology, education, charitable institutions, societies and clubs, logistics, infrastructure, real estate, shipping and aviation, travel and leisure, banking and financial services. He also advises on various associations and Chamber of Commerce. He is the chairman of the Expert Committee on GST, Madras Chamber of Commerce and Industry, and also a member of the General Committee of Madras Chamber. He is the member of Finance and Taxation Committee, CII, Southern Region, and president of the Revenue Bar Association. He is also a member of the SIC, Indo-American Chamber of Commerce. He is the recipient of the Vocational Excellence Award from the Rotary Club of Madras Southwest. He is actively involved in special causes through music and also forays into humor writing. With this, I'd like to welcome sir. Thank you so much, sir, for sharing your vast knowledge, and thank you so much for taking your time to give us some knowledge on one of the most discussed topic, which is input tax credit. This entire forum is over to you, sir, and thank you so much. A huge round of applause for sir, and we welcome you.
Thank you, Divya, and thank you, Bishan. Thank you, Yash. Thank you, Mr. Hari. Thank you, Ms. Anjali. The other gentleman, I forgot his name. Thank you to him also. First of all, hats off to what you guys are doing during these difficult times and COVID times, to hear something reverberating so much of positive energy. You know, the kind of service that you, the chairman, the branch at the leadership of Mr. Harith is doing is fantastic. I'm just, now I'm still mind-boggled by the fact that you are looking at picking up people in cars to take them to test, to doctors, ensuring food is provided, ensuring medicine is available on call, and what not. This is unbelievable. I'm a Rotarian myself, but we are still fumbling. I saw a couple of Rotary friends also in the call. While we do think of certain things and we do try to do things like this is a very professional approach of understanding what the specific needs are, and hats off. God bless all of you for your initiatives, and may your tribe grow bigger and bigger. And may the number of people who are affected go lesser and lesser. So with that, I will move on to my topic. I would request Yash to start the slides. See, this is a topic which is always relevant. Right from the day GST started, this topic is relevant, and it continues to be relevant. And it's an interesting thing that despite so many readings of the provision, as Bishan rightly put it, the issues that come up is always different. And I would put two reasons for the issues with due respect. One reason for the issues and dispute is that there is this enthusiasm to go and seek an AAR. And when somebody goes and knocks the doors of an AAR and an adverse ruling is given, the adverse ruling unfortunately gets a lot of publicity. And then it is shared across all social media groups and everybody discusses it, and then that becomes a dispute point. The second is, of course, there could be innovative interpretations on the provisions, and that could largely flow from the legacy of the past. I think both professionals as well as the revenue officials have to shake off to some extent the legacy of the past. So the past has not been that great as far as input tax credit is concerned. So each time we try to imagine the situation in the past and try to find out an answer. So let me look at it afresh. The way you have to look at input tax credit is look at afresh. Input means any goods. Can you be more wider than that? Any goods other than capital goods. And what should happen? It should be used, or you should only intend to use. Now there is a ocean of a difference between use and intend to use. So even if I intend to use, nobody can say why you have not used it tomorrow, why you have not used it 3 months later, why you have not used it for 6 months later. I intend to use it. I could be lazy enough to use it. Doesn't matter. So long as I intend to use it, I should be eligible for credit, provided I demonstrate that it is in the course of furtherance of business. So in the course of furtherance of business also takes a very important twist in the whole story. And this is way different from the earlier days of inputs used in relation to manufacture, or inputs used for the purpose of resale, or inputs used for providing output services. It makes a vast difference when the test is in the context of business. And you look at the CGST definition of business, it is quite wide. Section 217 defines business in the widest possible manner. Next, please. Next. Capital goods is defined whereby the goods which you seek to capitalize in your books would get the name of capital goods, or would get identified as capital goods. Now, if you remember in the past, capital goods and inputs, the distinction continued on account of the miserly approach of the government in granting input tax credit. They would give full credit for inputs, but they would not like to give full credit for capital goods. So they would say that this is capital goods. I can give you in 2 installments, or I can give you in 3 installments. Or sometimes they'll say I'll give you in 36 installments. But as for inputs, they didn't have any such quantity. So, and this was again based on this old theory that capital goods means will be very costly, machinery will be 1 crore, therefore excise duty will be heavy, VAT will be heavy, we can't give you that much of credit. If you give you that much of credit, then you will use all that credit. If you use all that credit, my monthly collection of tax will come down, my cash flows will come down. You know, that thought process completely prevailed over the drafting of the legislation. And therefore, capital goods had a different treatment in terms of availability of credit. And therefore, capital goods also had a different definition under the old law. For example, if you remember, under the SENVAT credit rules, capital goods was defined based on chapter. So if an item falls under chapter 82 or 84, it was capital goods. So even an ordinary item which could fall under 82 or 84 would be identified as capital goods. Whereas VAT law defined capital goods in their own peculiar way. Tamil Nadu, for example, defined capital goods in its own peculiar way in a list of set of items. The Gujarat defined capital goods. Gujarat VAT law defined capital goods by referring to the SENVAT credit rules. The Maharashtra defined capital goods by saying capital asset under Income Tax Act. And the cake goes to Karnataka, which defined capital goods by saying capital goods means such other goods as may be prescribed by our commissioner from time to time. So we had peculiar definitions of capital goods under the old law. But now we have a situation where the capital goods is defined as the am I audible? Okay. So there are some issues in some part and there are some issues in some parts. I'll just proceed on the assumption that it is audible.
No, it's going good, sir. It's going good.
Thank you. So capital goods means the value of which is capitalized in the books of accounts of the person. So accounting comes into the picture. So how do you treat this item from an accounting perspective? Are you capitalizing it? If you are capitalizing it, then it becomes capital goods. If it becomes capital goods, nothing happens. You get the full credit, but you need to factor how are you going to treat the depreciation. So if you're going to claim depreciation under the Income Tax Act, then you can focus your depreciation and confine your depreciation only to the actual cost of the asset. You cannot claim depreciation on the duty credit portion or the GST portion. So if 1 crore is the value of the capital goods and 18 lakhs is the GST element, then you get depreciation on 1 crore. You don't get on 1.18. Of course, this again is a very vague philosophy of not giving you double benefit. I don't know how they perceive this as a double benefit because both are different laws. But then somewhere the GST powers that be seem to think that income tax and GST is one and the same. Otherwise, how would you explain all these recent spate of notices saying that your GST return is showing X, but your income tax return is showing Y? Explain the difference and pay the differential tax. How can you compare both these returns? Income tax return is based on computation of income. GST is based on a transaction-based tax. Both are completely not comparable. But unfortunately, some of this is still done. So then you have to take a commercial call. If I want GST credit, then I forego some amount of depreciation. Similarly, I also have to take an accounting call, whether this is a capital expenditure or revenue expenditure. There I'm bound by guidelines, I'm bound by accounting standards. I can't choose. I'm bound by the way the accounts have dictated in terms of what has to be done. But there could be still issues where there could be replacement of parts of machinery where you can write off as repairs and still not call it as capital goods. But then the whole thing is a cost benefit exercise. Next, please. So if you look at it carefully, we are seeing three items. We saw a definition of input, we saw a definition of capital goods, and we're now seeing a definition of input service, which kind of mirrors the definition of input. Any service used or intended to be used by a supplier in the course or furtherance of business. That's all. So it must be a service, it must be used, or it must be intended to be used, and for what? In the course or furtherance of business. So if you look at all the three definitions carefully, nowhere does it say that the input must be used to provide an output supply. Nowhere does it say that the capital goods must be used or intended to be used for providing a taxable output supply. Nowhere does it say that the input service should be used for providing a taxable output supply. This is a very important concept. This is a very important lesson that we take forward, whereby there are tremendous amount of interpretations possible based on this theory. So imagine a situation where you start your business and you are procuring many things, and your sales are yet to materialize, your purchase orders are yet to materialize, your business is yet to really take off. But nobody can say, no, you can't claim credit. You keep claiming credit. You're entitled to credit, you keep claiming credit. When the day comes, you'll utilize. So that is the advantage of this. Next. So the focus is nexus to business. The connectivity is to business. The scope is much, much wider than the SENVAT credit and the VAT credit law. And then what is furtherance of business? Now, while I made a statement saying that IT returns and service tax returns or IT returns and GST returns cannot be compared, that is because you cannot compare apples and oranges. But when principles of law are laid down as to what constitutes business or what constitutes a particular term or what constitutes the meaning of a particular term, that is universally applicable if you are able to match the context. So if you look at the income tax law, the expenditure under section 37 very clearly talks about business. So an expenditure will qualify as a business expenditure, and therefore courts have interpreted as to what is business expenditure. Therefore, when you apply those decisions to say, I'm eligible for credit because this is an expenditure I've incurred in the course of furtherance of business, these decisions will come into play. And why have I given you two old decisions? I've given you two old decisions based on my belief or confirmed belief that nothing changes. The same thought process will continue. For example, if you look at the Walton decision, the Supreme Court observed that it is not open to the department to adopt a subjective standard of reasonableness and disallow part of the business expenditure as being unreasonably large. How many times have you heard this question from the tax authority saying, no, why do you have so much of input tax credit? Why have you claimed this 1 crore GST credit? There is something fishy if you have claimed so much of credit. Why should it be fishy? So long as a genuine procurement, so long as a genuine transaction, so long as I've paid the vendor and I have the goods, I've received the goods, I've received the service, I'm entitled to credit. What more do I need to prove? Why did you pay so much for this transaction? I'm a Buddhu, I paid so much for this transaction. Why did he charge so much for the transaction? He's a fraud, he's charged so much for the transaction. So long as I am able to prove the genuineness of the expenditure, I'm entitled to the credit. So nobody can say this is unreasonable. Your expenditure levels are much more than what is warranted for your business. See, the revenue cannot sit in judgment over the businessman and say, this is how you should run your business. Only the businessman knows how to run the business. He may make mistakes, but he is the best person equipped to make those mistakes. Similarly, in Dhanraj Giri, the Supreme Court observed that it is not open to the department to decide what type of expenditure ASTI should incur and in what circumstances. You cannot. No tax authority can sit in judgment and say, no, why did you engage this particular service provider? Why did you take this particular route? You could have taken some other route. This is how I run my business. Why did you buy this raw material? You could have used another better raw material, which will give you a more product efficiency. This is what I bought. This is what I used. So long as I demonstrate my genuineness and bona fide of the purchase, I have nothing else to worry about. Next, please. This is a 2020 decision. Therefore, I have also reiterated this principle. Supreme Court in the case of Shivraj Gupta has set aside the order passed by the Delhi High Court and held that the commercial expediency has to be adjudged from the point of view of the assessee, and the income tax department cannot enter into the ticket of reasonableness of amounts paid by the assessee. The revenue has no business to second guess commercial or business expediency of what parties at arm's length decide for each other. They are the contracting parties. They may make mistakes, they may not make mistakes, but the tax departments cannot question unless, of course, they're able to say the whole thing is a bogus transaction. Next. Now, you need a glimpse of the past to understand the present. In the past, this is because of the fact that some of you are very young members and probably something is new. So a little bit, I'll go on this journey. Take manufacturers. Originally, manufacturers did not have anything called as MODVAT. There was one vague set of procedure whereby the same item can be set off against the same kind of item. Then MODVAT came because VP Singh brought MODVAT way back in 1986. And then it was a reform of unbelievable levels. And whenever you have such a reform of unbelievable levels, you always have show cause notices. So MODVAT was followed by a number of show cause notices where everything was questioned. For example, in MODVAT, what happened? They said input used in or in relation to manufacture qualified for credit. Manufacture final product. So first of all, they question what is an input. Then they question used in manufacture. Then they question manufacture. Then they question final product itself. So everything went into decisions. In fact, some of these decisions have laid down the rules, have ironed out the path, have smoothened the greases to get this beautiful fabric that we have today in the form of definition of input and input services. I will pick out one fantastic case law called as Ballarpur Industries. Now, Ballarpur Industries is also interesting for many reasons. A few days, a week ago, you would have seen in the newspaper the demise of Shri Soli Sarabji. Now, Shri Soli Sarabji argued this matter for the SSC. Now, in Ballarpur Industries, what was the question? See, typically, this was the pre-MODVAT days called a set-off procedure. So, what typically happened was, you have Ballarpur, as you understand, is a paper manufacturing company. In a paper business, it's very interesting, where it is typically next to a river. They use a lot of wood. So what happens is that there will be one giant cutter, which will cut all the types of wood into smaller pieces. And then there will be some kind of a conveyor belt, which will carry all this roughly cut wood small pieces and put it and deposit in a cooker. Now, this cooker is not a small cooker. It will be the height of about a 5-story building or a 3-story building. So all the wood pieces will be put inside. Water will be added. A lot of chemicals will be added. And the wood will be cooked. And once the wood is cooked, it becomes very soft. It becomes, if you take out that piece, it will look like a small brownish sponge or a brown cotton. It will be made of various fibers, and those fibers are called lignin. So then, after this entire thing happens and the cooking happens and this becomes so soft, it is then transferred into another big container where a lot of other chemicals are added, and then talcum powder is added so that you get the whiteness of the paper. And it becomes a kind of a milky liquid. Then you have a big, huge machine. This is another case law called as Sirpur Paper Mills. If those of you would remember the Immoral property, will remember this case law. So this huge machinery is combined of various drums and pulleys and levers and layers, etc. It will be the size of a railway bogie. And you will find this liquid flowing through various rolls of metal. And then you'll have huge giant fans blasting the air on the paper, on the liquid. So by the time this liquid becomes solid and rolls out, you'll have the paper. That's why if you keep the paper in the front of the light, you'll see some small, tail-like pieces. Those are the lignin fibers. Basically, it's all of them are amalgamated together. Now, what is this drama behind MODVAT credit? Paper is liable to excise duty. So to make this paper, I explained this process. So during the course of my process, I explained to you that a lot of chemicals were used. So one officer came to this brilliant conclusion that chemical is not an input. And he came to this brilliant conclusion by asking a question saying, I don't see the chemical in the paper. Unless I see the input in the final product, I cannot give you credit. And that is how the matter landed before Supreme Court. And then after hearing Soli Swarajji's arguments, and his arguments were very, very specific, where he said that something need not be physically present to demonstrate its usage in the product. So the Supreme Court then gave its famous observation saying, the disappearance of an input is required for the appearance of the output. So that is how they, first of all, we fought, or our seniors fought these input cases. And then we had this fantastic judgment where that it need not be physically present. It need not be seen. It has to be used. So usage need not be direct. Usage can be indirect. Usage can also be a disappearing act. For example, if you're cooking, you can't expect to see the various ingredients that you've used in the cooking at the final end of the product. Then the product is not really well cooked. Something has to blend, something has to disappear, something has to evaporate, something has to melt, something has to caramelize, something has to merge together. Then only you get your beautiful, tasty product. Therefore, from a manufacturing perspective, something will die, something will merge, something will melt, something will evaporate, but all of them are in the course of usage. And that is how the test of manufacture was established. Then you had number of judgments where they also said indirect inputs were qualified, inputs lost during manufacture. Now, this is a very interesting point which will be relevant even in GST. A lot of people think that if something is lost, then input is also lost. Not necessarily. How is it lost? Is it lost while it is sitting in the storage tank? Or is it lost while sitting in the godown? Is it lost while moving through the machinery? Or is it lost while I have not even opened the package to put it into my factory? So that becomes very critical. When did you lose your input? Did you lose your input when you started the process of manufacture? Or did you lose the input in the course of manufacture? Or did you lose the input even before you started the whole activity? Now, if it's the third case where inputs are lost before even the activity starts, then it could be very difficult. But there again, we have to examine 17.5 versus the definition of inputs, which I'll come to a bit later. Inputs used as fuel and sale of electricity. Now, most of you would have seen this is now. Let's talk about traders to some extent. Some of you are also would have practiced VAT, so you know what I'm talking about. In CST, you can always buy goods from other states. So when you buy goods from other states, you can buy it for the purpose of resale, or you can buy it for the purpose of use in manufacture, or you can buy for the purpose of use in telecom, or you can buy for the purpose of generation of power. So typically after the 2017 constitutional amendment and the GST coming into force, the CST definition of goods is now confined to petroleum products. Just like how VAT is levied only on petroleum products and alcohol, CST, Central Sales Tax, is only on these petroleum products. Therefore, a person sitting in Gujarat could buy, let us say, from Delhi, petroleum products by issuing C form and purchasing at 2%. Now, this 2% CST is a cost. Well, CST still continues, therefore it's a cost. We can live with it. But somehow this issue came up, and one thought process came saying that, no, we cannot give you C form. You cannot buy petroleum products and then use it and manufacture a machinery because you're only paying GST and therefore you cannot issue C form. So many of the states started closing their portals for issuing C form. And the matter went to Jharkhand High Court, matter went to Punjab High Court, matter went to Madras High Court, and the famous Ramco Industries Supreme Court has come, whereby Supreme Court has very clearly said that there is nothing that prevents a person in GST from buying petroleum products by issuing C form and using it in his manufacturing process. And there is nobody can prevent him from buying interstate purchase by issuing C form because 8.3 still permits it. So Finance Act 2021 has amended section 8.3 of the CST Act, whereby it is no longer possible to issue C form for these purchases unless you're in the same business. So if you're a petroleum dealer, you can buy petrol and sell petrol. Or if you're a magic man where you can buy petrol and make diesel out of it, you are entitled to purchase petrol. Otherwise, other manufacturers cannot buy petroleum products by issuing C form. Now, what is the impact of this? If you buy from another state, let us say Rajasthan, and the VAT rate for petroleum product is 24%. When you buy on CST, it will be 24%. So your 2% cost suddenly becomes 24% cost. So this is a sweeping amendment that has come through the CST Act and remains to be seen whether it is tested in courts or not. Moving on, next slide, please. Now let me look at input tax credit in GST in the context of COVID-19. COVID-19 is going on till COVID-21. I hope it stops at 21. I'm sick of this COVID and its impact. So this COVID has thrown away, has brought in new challenges. Things which we never used in our vocabulary, we are now using. People used to have torches in their houses. Then somebody got fever, they got thermometer. Now you have oximeters, oxygen measuring instrument. Now people are talking about oxygen at home, oxygen concentrators being imported. Things have really changed. So what is happening today in a business? Sanitation has become very important. Temperature checking has become important. Safety is critical. Employee welfare is critical. And part of employee welfare also requires that the employee should work from home. And when an employee has to work from home, how is he going to work from home? He says, sir, I've never used a laptop in my home. How can I work? So the company says, don't worry, we'll get you a laptop. So laptops are got for the employee. Laptops are provided at the employee's premises. Then the employee says, I never use Wi-Fi and all. We occasionally use internet, and that too through some data or dongle. Don't worry, we'll set up the Wi-Fi. And then the company is now worried. If this fellow uses the laptop, what about the secrecy part of the information? What about the data leaks? And there is a vulnerability part. See, vulnerability part is like an employee is given a laptop, and the company assumes that the employee is going to use a laptop only for company work. The employer is entitled to make the assumptions. The employee decides to use it for company's work and also other work, personal work. Now that doesn't really matter. But what happens is that his children also use the laptop. Now vulnerability starts when certain sites which are accessed are not adequately protected. And then you may probably suddenly find that you are attacked. And why are you attacked? Because those of you who dabble into this IT security understand that the vulnerability exists how much ever you provide security. So you may have a little bit of software which is protecting you, but the sites that you access or somebody else access in the family would ensure that some Trojan horse would have come and sat into your system, and at the right point of time it may attack. So you may not even be able to access your systems because of the attack. So now you have a lot of specialized software layers and security which are created by the employer, even for the gadgets at home. So gadgets are required at home, equipments are required at home. These installation has to happen at employee residences. Now the question is, how does the company take credit on all these things? Now fundamentally, you are aware of section 16.2, which says goods must be received. Now obviously, one way of doing it would be for the employer to buy all these things, receive it in this premises, take the input tax credit, and then prepare a delivery challan and move them to respective homes. This is a nuisance. The other way would be to tell the buyer, tell the company, the supplier, saying that I'm buying delivery instructions. Please deliver at my employee location. So you're getting into bill to ship to model. Or even otherwise, a mere delivery instruction. Now, my fundamental view is that receipt need not be so looked at artificially to mean it must be received only at the premises where you got registration. Receipt should also mean implied receipt, because recipient is defined as the person who pays. Receipt and recipient should be read together, whereby even if a company based in Ahmedabad purchases certain gadgets and equipments and directs that they may be delivered to the residents in Rajkot, doesn't matter. You are entitled to credit. So all the equipments you are entitled to credit. Then there is a third way of doing it. You can tell the employee, you yourself buy all these gadgets, you yourself pay all these monies. Once you pay all those monies, you give me a debit note or give me a letter giving copies of the invoices. I will reimburse the cost. Now this is fine, you can do that, but nobody gets credit. The employee is not going to get credit because he's an individual, he's not in business. Your company is not going to credit because you have not bought those assets. You're only reimbursed the cost. Now the same issue is going to come up for imports. You're going to import oxygen concentrators, medical equipment, health infrastructure, and today you had this FAQ from the customs. See, I'm sometimes amazed at the way they operate. Well, I should cease to be amazed because this is my, I've crossed 3 decades in practice, and the same mistake seems to happen. So fundamentally, what is the point? Customs law says anything brought into the country is import. It doesn't care whether you pay for it or not. It doesn't care whether you buy it or not. It doesn't care whether you receive it as a donation or gift or not. So if some other, let us say your holding company feels that they have a lot of money and they have a lot of oxygen concentrators, they decide to donate these concentrators to the subsidiary. Or your cousin who's abroad decides to send you some of these gadgets as a gift. They land in the port. It becomes import. Once it becomes import, then customs duty comes, IGST comes. So the government thought about it and said, oh yeah, this is serious. We need to protect our, we should ensure that free flow of all these items are there. So let us grant the basic customs duty exemption. So first thing they did was they granted the basic customs duty exemption. I don't know why they didn't think of IGST at that point of time itself. They could have done it together, because IGST is levied under Section 3 of the Customs Tariff Act. It is no different from the countervailing duty of the Esther days. In the Esther days, all customs exemptions would have 2 columns, BCD and CVD, in fact 3 SAD columns. They could have simply done that exemption, but they did not do. Having not done that, they quickly realized that they missed it out and then restored the benefit of an IGST exemption. But it is now riddled with conditions. You must have a state government. That state government must appoint a nodal agency. That nodal agency must give a certificate. Only that person who's authorized through the nodal agency, an entity, etc., or a state government or some other department can procure those without payment of IGST. So there is going to be challenges, because a lot of people are going to end up paying huge IGST, because this is going to take some time. So when you pay IGST, then the logical question is, I'm a subsidiary. I have received these oxygen concentrators. I've paid the IGST on it, and then I'm going to distribute it to my community, to my public, to my government, to my healthcare centers, to my hospitals, etc. Now, what you do could be a CSR. So every activity of the company could also meet the corporate social responsibility requirement. And if it's a corporate social responsibility requirement, you're complying with the Companies Act. And latest MCA guidelines also support this. MCA circle also supports this. Therefore, you are now demonstrating a nexus to business. One may argue saying that, no, sir, it is not a business expenditure under Income Tax Act. That doesn't matter, because Income Tax Act has got a specific disallowance provision which says that CSR will not qualify as a business expenditure. But that is not the case as far as GST is concerned. So even if you import these equipments, even if you don't use them in your own factory or your business or for your own employees, it is for the purpose of business, provided you're able to say that this is part of your CSR activity or CSR program. So that is why I said the definition of input is very interesting. The nexus is to business and the nexus is not to output. Similarly, you might have special insurance schemes. These insurance schemes may cover your group of employees or their families, etc. But the beneficiary of the scheme is the company. So the company is the recipient of the service, not the employees. Of course, people might say, no, sir, this is for personal insurance. Not really. It is for the company's insurance. So all these, in my view, should qualify for ITs. Then, of course, practical issues, lockdown and stoppage of production. So there could be idle machineries, there could be equipments which are not at all used for some time. But then, as I said, intention to use always remains till you close your business, and therefore you're entitled to credit. Delay in payments to vendors can have tricky situations because you're all aware of the time limits of 180 days. We'll try to talk about it when we come to those provisions. Next, please. So I'm now moving on to 16.2. We now know what is inputs. We now know what is input service. We now know what is capital goods. We now know eligibility. We now know the scope and ambit of input. Now, what are the conditions for availing input tax credit? First of all, I must have a tax invoice or a debit note. Then I must receive the goods or service or both. Now, this is very, very interesting. Receipt of goods is something which is very critical. I agree, because the best way to track bogus transactions and punish the guilty would be to demonstrate, would be to ask to demonstrate, have you received the goods? Because you have an invoice that shows the goods, but you don't have the receipt of the goods, then you can't claim credit. But how do you prove receipt of service? Very difficult to prove receipt of service. Receipt of service is demonstrated by the fact that I've paid the vendor. What more? Why would I pay the vendor unless I've received the service? Fundamental commercial logic. general philosophy is that no customer would pay the service provider unless he has received the service. He may be unhappy with the service, but he must have received the service. So my payment is adequate proof, because you can't otherwise prove receipt of service. These are very intangible. How do you prove that the consulting services were received? Services are provided. The beauty of service is that it still remains with the provider. For example, if a consultant gives an advisory and the client receives the advisory, it is not as if the consultant loses that advisory. The consultant can provide the same service to anybody else. Whereas in the case of goods, when a batch of goods is given to a customer, that same goods is no longer available to the supplier to give to anybody else. Some other goods are available. That's the beauty of receipt of goods. Receipt of goods can be demonstrated by your GRN or your other documents, transport documents, etc. How do you demonstrate receipts, services? But then we'll have to demonstrate it through payment. Tax charge in respect of supply has been actually paid to the credit of the government, either in cash or through utilization of admissible input tax credit. Now, this is very tricky. The buyer is called upon to prove that the supplier has actually paid the tax to the government account. Here I would simply argue doctrine of impossibility. I cannot be compelled to do the impossible. You are asking me to find out whether my telephone fellow has paid GST or not. I can ask him. He'll say yes. If you ask him further proof, he says, I can't give you confidential data. Of course, then you will tell me that, sir, that is why GSTR 1 is there, that is why GSTR 2A is there, just as why GSTR 3B is there, that is why 2A is there, all these things you will tell me. But we did not operationalize GSTR 2. We did not operationalize GSTR 3. We had only GSTR 1, and then we had this makeshift GSTR 3B. Entire section 16.2 was designed on the assumption that the entire act is coming into force in toto. 16.2 is perfect when you say the tax charge has been actually paid by the supplier to the government account. If you're able to say that GSTR 2 and 3 were also operational from July 1st, 2017, once you've given a go-by to those GSTR 2 and 3, once you've given a go-by to section 42 and 43, you can't go back to 16.2 and insist that you must prove that the supplier has paid the tax. That is not fair. You have all these sections were created in harmony. See, please imagine when GST was created, everybody believed that the whole thing will work through the portal. The government believed, the industry believed, the professionals believed, everybody believed. But the technical glitches were just too much that it had to be abandoned. So when you abandon portions of the act, when you don't no longer operationalize certain portions of the act, you cannot insist on other portions of the act which hinge upon or depend upon these operationalizing provisions. And that is precisely why I would argue that you cannot insist on 16.2 has to be differently looked at. Then everybody said that for you to claim credit, the supplier should file return. Where do you get this? Because if you look at the language of section 16.2, it used the word, he has received the goods. He is in possession of tax invoice. He has filed the tax return. He is in possession of tax invoice is recipient. He is in receipt of goods is recipient. Therefore, he, in the context of filing of returns, can only mean the recipient and cannot mean the supplier. And this is what I've been arguing from 2017. And now I stand vindicated by the fact that Finance Act 2021 has amended section 16 of the CGST Act and added one more condition to section 16.2 by insisting that the supplier must upload his return. Therefore, till this new condition comes into force, the concept of supplier filing or uploading his return does not exist. What is existing is only the recipient filing his return. Next, please. Conditions in section 16.2 requiring the buyer to verify whether a supplier has paid tax to the government has been challenged before the Delhi High Court in Bharat Telemedia. And Madras High Court has been consistent on this. Even recently, you would have seen some of these circulations on social media, where in Vinayaga agencies, Madras High Court held that department is not empowered under section 1960 of the TN VAT Act to revoke the ITC availed on the ground that the selling dealer has not paid the tax when the petitioner dealer has paid tax to the selling dealer. That is the key thing which the buyer or recipient has to do. Here is my proof that I have received the goods. Here is the proof that there is a tax invoice raised by the supplier. Here is the proof that I made the payment to the supplier through proper banking channels. Here is the proof that the payment has been acknowledged. I have done everything in my control. What more do you want me to do? I can't go and sit on the supplier's head and ask him to insist that he must show proof that he has paid the tax. That is not my control. So you apply the Vinayak agency's logic for that. Next. Delhi High Court, Arise India, similar principle. Section 9(2)(g) of the DVAT Act does not make any distinction between bona fide purchasing dealers and others. The provision should be read down whereby dealer or class of dealer shall not include a purchasing dealer who has bona fide entered into a purchase transaction with a valid registered selling dealer. Now, there's a new drama that is going on saying that you have bought from a vendor, but the vendor GST has been cancelled. When I bought it, his GST number was valid. When did it get cancelled? No, it was cancelled with retrospective effect. How does it affect me? When I looked at the portal, when I looked at his bona fide, when I looked at his profile, when I did my diligence, he was a registered dealer. I can trust your portal. What more can I do? Having purchased those goods from a person whom I believe to be genuine based on the portal, if his registration is cancelled subsequently and that too retrospectively, my transaction during that interim period should not be tainted, should not be affected. If I buy even after cancellation, then yes, you're right. But during that period, it is not fair. Next. Of course, insofar as this selling dealer paying tax has not been accepted with the Bombay High Court, they give a contra view in the case of Mahalakshmi Cotton Ginning. So my fundamental point is, can filing of GSTR1 be a condition for availment of ITC by the recipient? Before the amendment is notified, a vehement no. After the amendment is notified, possible, even though we can still argue on GSTR2 and GSTR3. Can payment of tax by the supplier be a condition for availment of ITC by recipient? You still have a case, but it will have to go to courts. Next, please. Now, moving on to Rule 36(4). Now, this is one more aspect. Sir, we compare the balance between this and that. It is less than 20, more than 20, less than 10, more than 20. Rule 36(4) says input tax credit shall not exceed 20% of the eligible credit, then brought down to 10%. Then you have this cumulative formulas for COVID-1, COVID first wave and COVID second wave. So before going into all this aspect of 20, 10 and cumulative, etc., let's look at the next slide. What does the board say? Board said 36(4) is a new provision. The restriction is not imposed through common portal. Responsibility lies with the taxpayer that credit is as per law, and therefore he should do it on a self-assessment basis. See, because let's look at 36(4). 36(4) can never cover a bill of entry transaction. 36(4) can never cover a self-assessment payment, a self-challan payment for RC. So how would you say only partially certain transactions are governed by this? Next. Before going into all that, is 36(4) itself valid? Now, what is 36(4)? Sir, it is a rule which says I shouldn't do this, I shouldn't do that, or I should do this, I should do that. So, as a lawyer, my fundamental question is, where is your source of power? You're now walking into my books, walking into my business territory, and then taking away some of my credits, or clamping down my eligible credit, or squeezing my available credit by saying that you cannot claim more than so and so, so and so, and thereby trampling down on my available rights. You must be duly authorized. Where is your power? 36(4). But 36(4), you can only trace it to section 43A. 43 Cap of the CGST Act says, when they thought that they can do invoice matching, they decided to bring 43A, whereby you will match the invoice in the portal. And 43 had a subsection which says, rules can be framed for putting this 20% limit. So 36.4 owes its origin to 43A. 43A has not yet come into force. If 43A has not yet come into force, then the power to restrict credit does not flow from 43A, and therefore you cannot restrict the credit. 16.2 does not confer any power to restrict credit. If at all credit can be restrained, it can be done through 17.5, and 17.5 is silent as far as this item is concerned. Therefore, the validity of 36.4 itself is very much in question. Writs are pending in Karnataka High Court. Next. Now moving on. As I said, ITC is a package. You have a definition of inputs, then you have the conditions in terms of section 16.2, but you cannot read a topic of ITC without going to section 17. Of course, I'm not even going to 17.2 and 17.3. I'm going straight into 17.5 because that is the most relevant topic today. Parliament wisdom. ITC shall not be available. No, I don't know what pressure the lawmakers get in saying that, no, I won't give you for this. I won't give you for that. No, you cannot touch this. No, you cannot touch that. After all, the philosophy is to eliminate cascading effect of tax. The lot of discussions have gone on eliminating cascading effect of tax. If the fundamental philosophy is to eliminate cascading effect of tax, why can't you give credit on everything? That should be the thought process. Maybe in future, because of the robust tax collections, which every month they take credit, maybe the laws would change. We'll have to wait and watch. Motor vehicles for transportation of passengers having approved seating capacity of not more than 13 persons, including drivers, except ABC. So typically, you can't take credit in respect of motor vehicles unless it meets certain criteria. So more than, if you're using something like a vehicle which has got significant capacity of more than 13 persons, which is used for transporting your employees, etc. Yes. If you're a car dealer where you buy motor vehicle for further supply of such vehicles, yes. If you're engaged in the business of transportation of passengers, yes. If you're engaged in providing training of driving such vehicles, yes. So straight away on the asset side, on the motor vehicle side, they are not giving you credit. Then they look at the next side. General insurance, servicing, repair, maintenance, insofar as they relate to motor vehicles, will also not qualify for credit. This is very interesting. Why would they want to deny ITC on maintenance, servicing, and insurance? After all, they are separate services. An insurance of a car need not be a motor vehicle service. It's an insurance service. A repair and maintenance is a repair by itself, a service by itself. Again, you don't understand why some of these rules which are laid on from the Roman days, you never understand the reasons. So this also we never know. They don't want to give, they don't give. That's all. At least the language is clear. Next. Now this denial of ITC in respect of repairs, maintenance, and insurance came through an amendment, which was notified only from 1/2/2019. Therefore, my view is that prior to that, you can very much claim. You can rely upon this decision of Swastik Tobacco to argue in case you get a notice. Next. Similarly, just like motor vehicles, they don't like other their cousins. They don't like the vessels. They don't like the aircrafts. So you can't get credit on motor vehicles. You can't get credit on vessels. You can't get on aircrafts unless you are a dealer in vessels and aircraft, or unless you transport passengers, or unless you provide training or navigation of vessels or aircraft. Next. Of course, I just pegged some questions. Can ITC be claimed on aircraft used by the company? A lot of companies have their own aircrafts. They use it for their travel of their top executives. And given the current scenario of public travel being a big issue, a lot of private travel is happening. So can ITC be claimed on aircraft used by the company? Can ITC be claimed on aircrafts by an airline, which is both economy and other than economy tickets? Because economy is a lower rate of GST without ITC. Other than economy is a higher rate of GST with ITC. So can they claim credit on the aircraft? Next. Now, there could be different views on this. I'm just putting a perspective. This may not be the best answer. There could be other answers too. There was a decision called as Global Vectra in the service tax days, where the tribunal said that when services provided to various companies who chartered the aircraft, the payment is not based on number of passengers, no tickets are issued, and no charges are collected. And therefore, it is not a transport of passenger service. Please understand, in the service tax regime, the dispute was whether the activity would be falling under transportation of passengers by air or not. Because at that time it was not taxable. So when the company provided the private aircraft facility, it was argued that it is transportation of passengers by air, and that was rejected in this particular case called as global vector. Next. The term passenger came up for interpretation in King Rotors, where they said that passenger refers to natural persons. And when an aircraft is chartered by an offshore oil company to ferry their personnel, the aircraft is used by the independent third party, namely so-and-so company. And therefore they said it cannot be called as members of the public. Now I differ to some extent. Next, please. We'll quickly go to the next slide. How can you say that an employee traveling in a flight is not a passenger? He's also taking the same air route. He's also taking the same, he's also wearing the seat belt. He's also going through the precautions. He's also going the security in the airport. He's also have to follow all rules and protocols while traveling. He's also exposed to the same risk of air travel. Just because he's an employee of the company, does he cease to be a passenger? He's still a passenger. And for the aircraft, a private flyer or a private aircraft cannot simply take off. It has to have a flight plan. It has to have a passenger manifest. It has to go through security. All the documents have to be cleared at the airport. Without the complete description of the passenger manifest, they cannot be allowed to take off. The authority who wields jurisdiction or power over a commercial airline as well as a private aircraft is the same, DGCA. DGCA Airport Circular provides that in respect of private aircrafts owned by companies or corporations, only the employees, including chairman and members of the board, may be permitted as passengers. So the DGCA does not make a difference. It says that all of them are only passengers. So if they are passengers, they're only being transported. So if they're being transported, why not we claim the credit? So of course, we will have litigation, but it's an interesting thought process. Next. Similarly, block credits, you can't get on food and beverages. What went wrong with food and beverages? Why can't you claim credit? Now, I'll wear a devil's advocate and wear a different hat. Food and beverages. What should come to your mind? Notification 1/2017. Because goods are governed by notification 1/2017. Only 1/17 deals with goods. Restaurant service is not food and beverages. Restaurant service is governed by 11/2017. Therefore, when restaurant service is treated as a service by virtue of Schedule 2 of CGST Act, when restaurant service is treated as a service and taxed as a service under 11/2017, should not 17.5 say food and beverages, restaurant services? It doesn't say so. Therefore, I am of the view that you should be still in a position to claim restaurant service as input tax credit, because what is prohibited is only food and beverages and not restaurant services. Nobody can say, no, in the restaurant service, what you're getting only food and beverages. You're not looking at underlying thing. If that be the case, then the tomato sauce supplier should say, my tomato sauce is only tomato. Tomato is GST exempt, therefore sauce is exempt. You can't argue like that. Sauce is different from tomato. Restaurant service is different from the food and beverages that are served in the restaurant. Therefore, it may be possible to even argue that ITC can be availed on restaurant services. On simple premise, it is not covered in 17.5. Or even a peculiar example where a chartered accountant's office decides to make their own coffee. So when they make their own coffee, if they buy the coffee, it is a beverage, you can't claim credit. So let them make their own coffee. If they make their own coffee, coffee powder is bought, you can get credit. Milk, no GST. Coffee making machinery, you can get credit. Use it in your factory, use it in an office, and you're using in business, and therefore you can save some cost. Next. 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 Moving on to further block credits, can a developer avail credit of GST charge by contractors? Can a developer avail credit in respect of GST charge by suppliers of services? Can a contractor avail credit of GST charge by subcontractors? Can a mall avail credit of the GST charge by contractors for building its mall? Next. So, if all of you are well aware of this concept, the focus is on 17.5C and 17.5D. Works contract services, when supplied for a construction of an immovable property, other than plant and machinery, except where it is an input service for further supply of works contract service. So let us say case of a company receiving works contract services for putting up a corporate office, or putting up a godown, or putting up a factory itself, or putting up a warehouse. Then somebody would tell you 17.5C, you have availed works contract service, it is for construction of immovable property, language is plain, you can't get it. Or you may buy cement, you may buy other services, and you may use it for construction of immovable property, which is again, let us say, your factory, your godown, your warehouse, or depot, or showroom. Again, they will say, no, you can't get credit. So it's a huge impact on factories, warehouses, godowns, theaters, malls, and commercial buildings. Next. Again, you have this debate on what constitutes immovable property. Immovable property is not defined. Works contract has got a link to immovable property by virtue of the definition. And then you have various questions that keep coming up saying that, what is this transaction? Is it construction of immovable property? And therefore, am I barred from availing credit? Or can I say that this is not construction of immovable property and therefore I'm eligible for availing credit? So then now people have started looking at what is immovable property. So typically we come to this conclusion that no, immovable property means you look at the Transfer of Property Act. You look at various other general principles on immovable property. You come to a conclusion that there is some significant nexus to the earth. There is a marriage. There is some kind of annexation to the earth. And once that annexation is there, a view emerges that it could be immovable property. So there are 2 points which you need to look at. What is the object of annexation? And what is the degree of annexation? Object of annexation, if you're able to demonstrate that this is very critical for the very functioning of the equipment and not mere aesthetic element or some kind of frill element. Now, I told you that when I talked about Ballarpur Industries, I also referred to Sirpur paper mills. Now, in Ballarpur Industries, I explained to you that the final element is that railway bogie kind of machinery, which is huge machinery with all those running machines, etc., and the liquid paper is rolled through it. Now, that equipment is a huge wobbling equipment. So that company decided, the manufacturer decided when they put up their equipment that they'd fit it to the ground with nuts and bolts. Now, Sirpur paper mills examined that question as to whether there is a manufacturer or not. And then Sirpur paper mill Supreme Court said, no, this is just kept for preventing the machinery from moving, from wobble-free operations, and therefore it is not immovable properties. Now, with due respect, the Supreme Court, when they decided in Sirpur paper mills, did not refer to earlier judgments, which were much better in terms of nexus to immovable property, and almost similar facts they've said it was immovable property. So subsequently, another judgment called as Triveni Engineering landed before the Supreme Court, where there was a turbo alternator. Turbo alternator means one is a turbo, the other is an alternator. Now both were connected by a particular piece of metal. Now, unless the turbo and the alternator are together connected to this metal, the turbo alternator cannot function. And to ensure that they continuously function, the turbo was fixed to the concrete pedestal. The alternator was fixed to the concrete pedestal through nuts and bolts. So the department argued saying, Sirpur paper mills has said, nuts and bolts means it is not immovable property. Triveni, Supreme Court said, Sirpur was wrong. Sirpur did not notice the earlier judgments. The earlier judgments are quite clear. And therefore, they said even a turbo alternator is an immovable property. In fact, there are other judgments. You can read the judgment of the Supreme Court in the case of Damodar Valley Corporation, where you have find this, some of these temples which are located in the highest part of the mountain. You have ropeway machines. So through ropeway, you go in. Now, this ropeway cannot hang somewhere. It is fixed to the mountain. You cannot say, no, it is fixed to the mountain, not to the earth. Mountain is also part of earth. And therefore, it is immovable property. So the object of annexation and degree of annexation does not necessarily mean that you are becoming part and parcel of earth, but the object is to ensure some degree of permanence. The object, the degree is also significant that indicates permanency. And that is how the theory was born, that if for some reason I have to take it out, then there will be damage. And that is how the concept of damage happens. You can't break and find out whether it is immoral property or not. Now, I've always given this example in a number of seminars in Ahmedabad, as well as in the VCS conference or the ICAI conference or the CTC conference. I've given this example. Nothing wrong in repeating this example. In the kitchen, you have a mixie, and then you decide to make breakfast and you decide to make a chutney. So you make a chutney in one particular jar. After making the chutney, you decide that after the breakfast, I want some juice. So I want to make some juice. Now, how do you remove the chutney jar? If the removal of chutney jar is such that you cannot remove unless you bring one crowbar, you bring a spanner, you bring a couple of big knives and metals, etc., and then pull out the whole jar from that. If that has to be done, then no other jar can be fit in the mixie again. That means you cannot take it out without causing damage to either that or to the other one or to both. On the contrary, if you can just like that take out the chutney jar by just removing it and then putting another juice jar and remove the juice jar, then it is very easy to remove it without causing damage. Now visualize this in a plant and machinery context. Visualize this in an AC plant. Visualize this in a power plant. Visualize this in a cement plant. Visualize this in an escalator. Imagine a mall where, of course, malls are now closed, but imagine a wall where the escalators are there for your benefit to climb to different levels. While you go to the escalator and stand on the first step, the steps start moving. Escalator should not move. If escalator moves, it is Harry Potter film. But the steps move and the escalator is firmly fitted to the ground, firmly embedded to the ground. Plants, cement plants, power plants, ropeways, these are all lifts. If you look at the way the lift is designed in your apartment, it goes deep down beyond the ground floor. There's a pit. Therefore, it is all integrated through civil and mechanical engineering. It is designed in such a way that if you press the third floor, it comes to the third floor. When you step your foot out, the alignment of the floor of the lift and the floor of the apartment should be the same so that you don't fall down. So immoral property has got different connotations. So you have to look at why it was annexed and the degree of annexed. You can't simply come to the conclusion saying that, no, it is wobble free, therefore it is convenience, therefore it is movable. So there are principles and decisions which are involved in determining what is immoral property. Next, please. Now coming back to this mall story. One mall decided that, look, I am putting up such a huge mall. My objective is to let out various units for tenants. My objective is to get out rent. On this rent, I'm paying GST. Since I'm paying GST, I should get credit on the construction. Then somebody said, no, 17.5, please look at the language. You cannot get the credit. Then this company said, then 75 is wrong. So they went to court. And court said, yes, you're right. We'll read down section 75D and said that the overall objective is defeated if you don't give the credit. Of course, the matter is now pending in Supreme Court. But this is a landmark judgment. Next, Orissa High Court. We can skip this for want of time. Next, please. We can talk a bit about this. Goods lost, stolen, destroyed, or written off. That's the language used in section 75H. A lot of people are coming to this conclusion saying that, sir, my final product is lost. My final product is destroyed. My output is destroyed. Therefore, I must reverse credit. Where does it say so? Entire language of 17.5 talks about inputs. If your inputs are lost, in the sense that somebody steals it, or a dacoity happens, or a calamity happens and they are lost, or the inputs are destroyed because of a tsunami, or you decide to write off an input because it is no longer viable. If your inputs are gone, then you must reverse credit. Nowhere they say that if your final products are lost or destroyed, etc., or your output is lost, you must reverse. So there is no necessity for you to reverse any proportionate credit, because that if there is a proportionate credit reversal, the law must say so. There must be a formula. There is no such formula. My view is that only inputs are covered under 75H, outputs are final products are not covered. Next. 17.2 says that where goods or services or both are used for affecting taxable supplies, including zero-rated supplies, and partly for affecting exempt supplies. Now, this is very, very important. Entire 17.2 nowhere says that you cannot get input tax credit if your exclusively using it for exempt supplies. That language is missing. What it says is, if you are using partly for taxable supplies and partly for effecting exempt supplies, then there is a formula. Credit shall be restricted in a prescribed formula. So 17.2 can apply. Goods and services both must be used for effecting exempted supplies. Next. So I'll quickly understand this sector-wise. Take hotel accommodation. I avail accommodation services in Maharashtra. I am based in Gujarat. Unfortunately, the place of supply is Maharashtra, and therefore the CGST and SGST has been charged in that state. Now you are right in saying that I'm not entitled to credit, because how can I claim the credit? But there must be some way I should get the CGST portion as credit at least. I can understand SGST portion not being given, but this fundamental flaw still exists in the law. Hotels and restaurants pay GST at 5% without ITC. Now, many of them saying that, okay, we are living with it, we'll accept it. But is that the end of the story? Do you have an alternative? Now, let's look at this 5% without ITC. Again, notification number 11/2017. Now, 11/2017 is a rate of tax notification. Therefore, it must specify only section 9 of the CGST Act, because that is the one which talks about power to notify rates. But if you look at 11/2017, it will say in exercise of powers under section 9, section 11, sometimes section 16. Why should it refer to section 11? Section 11 deals with exemptions. We already have 12/2017. That is exemption. Why should 11/2017 refer to section 11, which specifically deals with the exemption? Therefore, one view would be that the 5% is in the form of a concession or an exemption, and the box which says no ITC is a condition. Therefore, it becomes a conditional exemption. The full rate is 18%, but you are giving you a lower rate of 5%, like through an exemption notification, with conditions attached to it. If conditions are attached, then it becomes a conditional exemption. If it is a conditional exemption, you're entitled to say, I won't follow those conditions. I'll pay the full rate and take the credit. That should also be possible. Of course, bar sales, we can't talk about in Gujarat. We can talk in another state. Next slide, please. Developer, same question. Is 5% without ITC mandatory? By the same logic, one can take a position that it is not mandatory. I can take a view that I'll pay 18% and take ITC. Let's imagine this. You are paying 5% and you're availing ITC. What should the department do? The department says, sir, you're paying 5%. You're following 11/2017 as amended by 3/2019. You have violated the conditions by availing credit. Therefore, you are no longer eligible for 5%. You have to go to 18%. Right? They won't insist on reversal of credit. You have failed the condition. Therefore, the full rate should apply. Next question for a developer. Mere issue of CC, should it warrant reversal of ITC? Mere issue of CC by itself is not an exempt supply. I'm still in the same business. After I get the CC, when I sell an apartment after obtaining CC, I'm not liable to pay GST because of Schedule 3. But the mere issue of CC does not change anything. But of course, conservative view, look at the rules. If you get the CC, calculate unsold stock, calculate so much of credit, etc. People comply with the reversals. But I'm just putting a point that in case you've missed it, there is a legal argument available. Is sale of flat after CC an exempt supply? The word exempt supply connotes and denotes an existence of a supply. If supply does not exist, how can you call it exempt supply? Once you say sale of flat after CC is a third scheduled transaction, which is neither supply of goods nor supply of services, how can you then give it, rechristen it and call it as exempt supply? Can there be 5% for customers and 18% for landowner? Of course, why not? Because landowner already owns the land and therefore you're entitled to some input tax credit for that. Next. Tran 1, Madras High Court Division Bench held against the SSC and said that you cannot claim through Tran education cess and secondary education cess. across the courts, people are discussing matters of technical glitches. Matters are pending at the Supreme Court as well as High Courts on technical glitches. It's quite unfortunate that everybody has to rush to court to get some relief. Time limits are a big issue in 16.2. Whether time limits are, in fact, one other interesting question that comes up is whether the time limit extension contemplated by the 160 notification can be read and interpreted and elongated even to time limits under section 16.4, or whether the time limits provided by the Supreme Court in Article 142 through Article 142 declaration, can you apply that and say the time limit also stands extended? These are very, very interesting questions, but for paucity of time, I'm not going to spend much of time. But for TRAN matters, letters are coming, notices are coming, show cause notice is also coming. Here again, I have a different view. You cannot issue section 73 show cause notice. Why? Section 73 says where GST is not paid or where input tax credit has not been correctly availed. Input tax credit is defined as the GST paid on goods and services or both purchased or procured. TRAN 1 credit is not input tax credit. It is only electronic credit. So 73 technically cannot apply. They must have created a show cause notice mechanism in 140 subsection 1 itself. The rule doesn't help. 119 doesn't help. So not having built a separate show cause notice mechanism in 140, you cannot borrow the show cause of 73. The law must clearly say so. And then, of course, the retrospective amendment is also an issue where TRAN credits have been denied for certain items. But when amendment is retrospective, while the credit can go, there are judgments to say that there cannot be a penalty or interest. You can argue on those lines. Last slide. We'll skip this. Everybody is aware of this topic. Next, last slide. Open issues. As I said, what is an exempt supply is still an open issue. Is invoice matching the best solution? Government seems to move towards it. They have moved e-invoicing across the board from various levels to various levels that has come. But e-invoicing matching can be a pain because errors are significant. Refund of ITC on exports. Initially it was good. Now it has come down. And again, now challenges are there for both the SSCs and the government. Non-availability of ITC on some items, I've already talked about this. Time limit for availment of ITC, I've already talked about it. Rule 42 and 43 requires different skills. Your English skill must be phenomenal. Your arithmetic skills must be excellent. And you must have a lot of patience. If you're having a lot of these three things combinations, then you can understand Rule 42 and 43 and implement it. Because they're very, very difficultly structured. The best way for a youngster who's trying to understand Rule 42, 43 is to go layer by layer, go sub-rule by sub-rule, and put some numbers and examples yourself. Imagine a situation. Imagine that your SSC is having X, which is exempt, and Y, which is taxable. Put some numbers to it, 5,000, 4,000, total is 9,000, and then put some imaginary numbers and try to understand the rules with your own examples, like your old CA days, to try to work out that way. Then you learn the rule. Otherwise, it will be a huge challenge. So with that, I think I've come to my end slide. Next slide. Yes. Thank you thank you very much for a very patient hearing. I hope I conveyed as much as I could in this slot and shared some of my thoughts with you. If there is some time, I'll pick some questions. Otherwise, we can move on to the next speaker. I don't want to deny the time of the next speaker.
No, sir, not at all. We have some questions, and as the topic is so much of interest of everyone, we'll start the questions first from YouTube, because due to some technical issues, we have to start YouTube live. And there are one question that after amendment of section 16 gets notified, whether Rule 36(4) remains relevant, as there is now provision in the section itself. Yes, sir.
Correct question, and my response is you would know by now. 36(4) itself in the current form itself is irrelevant. But once the amendment gets notified, I know that's another challenge. Amending CGST is no longer easy, because if you amend CGST, especially the machinery provisions of CGST or main provisions of CGST, unless the other states also amend, 29 states have to amend, you cannot bring the law into force. Therefore, it's going to take some time before this clause gets, this AA clause gets into the statute. Therefore, once that clause comes in, then the filing of GSTR 1 becomes a precondition for credit. And therefore, Rule 36(4) itself becomes even more irrelevant.
Sir, next question is of C. Chintan Thakkar. Tapas, is Tapas Ruparelia there? If you can ask, Tapas. Yes, sir. The question is hotel and restaurant. There are two schemes. One is lump sum payment and regular for restaurants dealer is in regular scheme. Now he wants to give invoice at the rate of 5% to general public and 18% to the corporate. So that restaurant operator wants to give or charge 18% tax, and for retail customers he wants to charge at 5%. Like can that possible for them?
A lot of planning is required for that. You need to implement accounting systems for that. You need to implement invoice level segregation for that. You need to implement procurement plans for that. You need to treat the 5% segment as an exempt supply. You need to treat the 18% segment as a taxable supply, and implement Rule 42 from day one in terms of your operation itself. Even billing separately, counter separately also might work. You may be able to do this. Like some of those ARs you have seen in the context of your savories, namkeen is sold through a counter and restaurant is sold separately. How could they take it? So the ARs surprisingly have been friendly enough to say that you can go do both and maintain separate records. So you can maintain records and do it.
Thanks, sir. Next question is of CA Dishang Shah. What happens that in books of account, when they have incurred any expenditure, they have treated ITC also as a part of that expenditure, like say telephone expense. So they have not separated it to ITC receivable account. So in that scenario, can they take claim the credit on the portal? Vis-a-vis, they also take the benefit of making it as an expenditure. So, sir, in depreciation, they said it clearly for the capital goods. Here
No,
they have not said. Yes.
You would be bound by your guidance note on accounting standards. Your ICAI guidance note on accounting standards is quite clear, right from the VAT accounting to the GST accounting. They're very clear that if you procure an item on which you are claiming credit, your accounting entry would be purchase account data, the GST credit account data to cash. So you cannot treat it as part of purchases and also claim the credit, because that way you're treating it as part of cost. The moment you take GST credit, it cannot form part of cost. It has to go through a separate account called as GST credit and then set it off. So you would be violating your accounting principles. So I don't think it is correct.
Yes, sir. Tapas bhai, if you can now.
Sure, sir. Am I audible
Yes.
now?
Yes. Yes, yes.
Yes. So the next question there on YouTube is that supplier should stand only one rate for a year in case of renting of motor vehicle, because there are 5, 12 and 18% applicable. So I think probably what he's trying to ask is a person allowed to change the rate that he has opted for during the year?
Well, the notifications also came in the middle of the year. The amendment came in the middle of the year. The 5% and 12% option came in the middle of the year. It never came from April 1st. So it's a tough call in the sense that you, till the date when you're in the 5% regime, somebody else paid GST and reverse charge mechanism. When you, I'm assuming you're talking about GPA. So the moment you go to 12%, you're entitled to input tax credit. Now, when it was under reverse charge mechanism, you never availed the credit. Therefore, there was no violation. When you're under 12%, you're entitled to credit. Therefore, you're following the notification. So there's nothing wrong so long as you have one single method after you change. You can't keep doing for one set of customers, I'll allow them under RCM. Another set of customers, I'll go under forward. That doesn't sound very correct.
Yes, sir. Sir, if I have paid RCM on certain transaction and those transactions actually are not liable for RCM, so can I take the credit since I have paid the amount under RCM, though that on that transaction tax was not liable to be paid? So in such scenario, what will be the fate of ITC which I have taken? Can department deny my ITC?
See, this has always happened even in the past, where department has gone to the buyer and said that the supplier should not have charged on this transaction, and therefore you are not entitled to take. Where the answers from the court has always been that a revenue cannot approbate and reprobate. That means on one side you cannot collect it as tax, and on the other side you cannot say no, this was not taxable at all, you cannot take. So having collected the GST, you cannot say you are not entitled to credit. So first step should be that they should refund the money to you. Whatever tax you paid, saying that yes sir, sorry sir, you should not have paid, here is your check. You also cannot take credit, you reverse it. Now that makes sense.
Okay. Tapas bhai?
Yes, sir. I'll ask further questions from Zoom.
Yes.
Yeah. So next question is whether ITC of centralized air conditioner can be availed under excise. It was considered as an immovable property. So what is the position that we should be taking in the GST?
See, first aspect is whether it is construction of immovable property or not. That is the supplier's headache. Whether it is a works contract service, or whether he should treat it as a composite supply, or whether he should treat it as different distinct supplies. Now, if he has billed you very clearly as works contract service and 18% for the whole thing, then I think it is a fait accompli. You can't take credit because 17(5)(c) stares at you. But if he has invoiced in terms of composite supply, or if he has invoiced in terms of separate supplies, then you can examine whether the equipments are standalone and you can qualify as plant and machinery and take the credit. But it all depends on how the supplier has treated the transaction.
Okay. Sir, as you have said, Tapas bhai, sir, as you have discussed safari retreats, so in that context only, as the court has said, that GST is a value-added tax, and with this reasoning, whatever has been blocked to me, say a restaurant service or a rent-a-cab service, if it is used for the purpose of business, can I say that I am eligible to take those credits?
See, your safari is an excellent judgment. So you should tell the client that the entire credit is hinging upon the fate of safari. So if you are able to be transparent enough to the client to say that, yes, you can claim the credit, we are relying on the Orissa High Court. If it gets reversed, these are the consequences. If it doesn't get reversed and it is upheld, well, you have gained. Because it's very important, because you may lose the time limit of credit. A lot of people are exploring, even in a mall situation. People have asked us opinions to say that, can we claim credit based on safari? Because if we don't claim now, we lose the time. So then strategically, one way would be to say, okay, claim the credit, see if you can postpone your utilization. Like the Karnataka High Court passed a stay order, saying that you keep this amount separately. So like that, if you're able to park it and not utilize it, then your interest element is addressed. You don't have to be worried about interest. And if Supreme Court reverses safari for any reason, you can also reverse the credit. But if Supreme Court confirms and safari is correct, then there you are more happy.
In case the ITC, just 1 second. Yeah. So one with respect to CSR, whether goods distributed as a part of CSR on which ITC has been availed, will it not be hit by entry number 1 of Schedule 1, that is permanent transfer, disposal of business assets, where ITC has?
These are not permanent transfer. We are not getting into that. One issue would be whether you are hit by 17(5), where goods given by way of gift, etc. That could be one issue that can come up. But then, goods, when you give it away, something like that, is there a consideration? Yes, there is a consideration. And what is the consideration? My goodwill. My community treats me well. My industry treats me well. My employee is happy. I don't recall the name of the judgment, but there is a judgment in the context of these kind of things in income tax, where they say that there is an element of consideration involved in those kind of transactions, and gift or gratuitous nature is not there.
Okay. Thank you, sir. Sir, one question that as if there are related parties, in case of related parties, though there is no consideration as per Schedule 1, it will be treated as supply. And as per Rule 37 proviso, they said that for related party transaction, you are not required to see the payment within 180 days. Right. So if there are two companies where the directors are common, shareholders are common, and one company is supplying goods to the another, and the other company is also a related party. So for knocking out the balances, or they make the payment after say 1 year or a 2 year, can department say that this transaction is transaction with consideration, and hence you have to pay interest for this as you have not paid amount within 180 days?
I would answer it twofold. If my memory is correct, the proviso to Rule 37 is referring to distinct person and not related person. So you may have to treat it differently for head office, branch office, and holding company, subsidiary company, assuming holding and subsidiary are related. So for a head office, branch office transaction, there is no question of payment. And that's what the proviso says. There is no question of payment because there's only a branch and you cannot insist on a payment condition. But for a related party, it's a separate transaction. It's a supply by itself between these two parties. I would look at it differently. I would look at it whether Rule 37 itself is valid, has been activated. Because if you don't pay within 180 days, what do you do? I'll ask you now, because you're all experts in return filing. Please tell me what you do if you don't pay within 180 days. Anybody can give me an answer.
Tapas bhai or Meenal, if you want to answer.
Maybe reverse the credit.
Correct, but what do you do? How do you reverse the credit and your return? What do you do?
So there are different ways the reversal is done. Either we add to the payment, or in the ITC itself, we lessen the credit amount. And thereby, either if there is any additional liability, then we pay off, or our ITC gets reduced. Either of it.
Fine. I understood what you did. But if you look at Rule 37, it says something else. It says if not paid in 180 days, it requires you to add it to your GSTR2 or something. And GSTR2 doesn't exist. So one could probably say that the mechanism for implementing the 180 days rule through a rule doesn't exist. Number one. Number two, the section says fails to pay. So if you are related parties, you can very well renegotiate the terms of payments. Fails to pay means not delay in payment, failure to pay. So you can, let's take a case where Bishan is selling to Minal and their credit period is 9 months. Can the department say, no, 180 days is over, you have to reverse? My credit period itself is 9 months. Therefore, fails to pay is a very powerful term. And therefore, if you can renegotiate your term, that may be a better solution than an interpretation.
Yes, Tapas bhai. The next.
Yes, sir. In case of works contract, can the material ITC be taken if purchased directly for repairs and maintenance?
See, if it is used for construction, section 17.5 comes into the picture. If it is used for some kind of repair and maintenance, you can always fall out of the ambit of 17.5 by demonstrating the actual usage. For example, let us take a factory. There are some items which are just used for holding up certain equipments. There are some items you may use for painting the floor, or some items you may use for some kind of safety related activity for the equipment, etc. Or some could be very minor repair and maintenance which need not amount to this construction or reconstruction, etc. So in all those cases, you can demonstrate that it is not hit by 17.5. Because the philosophy of 17.5 is that we do not want credit if immoral property emerges. That is the philosophy. So if you're able to break that, you should be able to get it. Unless, of course, you can always fall back on the Orissa High Court.
Should we take more questions, Bishan bhai?
Yes, please.
Okay. In case ITC, in case of payment which has to be done by a recipient, I think that the question is from a perspective of this 180 days payment. The question is, instead of recipient, if let's say somebody else makes payment to the recipient by their credit through their credit card, for example, an employee or somebody, and then it is reimbursed, can we still take the ITC?
Of course. See, you have paid the money. In your books, you have closed the liability. From an accounting perspective, you may have other dealings with the third party as to why for example, somebody could be lending you money. The bank could be making the payment. Nothing wrong. So long as from the books perspective, the supplier's account is acquired and the liability is no longer there as far as the supplier is concerned, you made the payment.
So next, yes.
So yeah, next an interesting one from Nitesh Bhai. If expenditure is neither capitalized nor revenue, but considered as a deferred revenue, can we take ITC?
Only if it is capitalized, you should treat it as capital goods. Otherwise, it is only an input that is procured or an input service that is procured. Need not be any kind of an expenditure. So there is nothing wrong in your treating as deferred expenditure, though you would run into some rough further in income tax, but otherwise it should be possible.
Okay. If somebody has not filed annual return of 2019-20 but is filing the return now, can the ITC which was not taken or which was missed out during the earlier period, can they take the ITC now?
See, this is a bigger question in terms of whether section 16(4), when it refers to return under section 39, what is the return it refers to? So return it refers to, in my view, is GSTR 3 and not 3B. Of course, Rule 61 was brought in from 1/1/2021, but GSTR 3 is what is referred to in 39(1) still. Therefore, it says return or annual return, whichever is earlier. Therefore, your annual return time limit is still available, then yes. But if that time limit is also gone, then you are hit by section 16(4). And it is difficult to say that the provisions will be struck down or anything like that. It's only a question of interpretation as to what is covered in terms of timelines, because of late you find courts upholding time limits for credits. So I wouldn't say that you have a very brilliant case for challenge as far as time limit is concerned, because a number of decisions are kind of moving that way.
There have been repeated questions on GSTR 2B as to what is the relevance of GSTR 2B, and while reconciling, is it 2A on which we should be relying or 2B?
I just now spent 1 hour saying ignore 2A. You have your invoice, you have received the goods, you have made the payments, get additional proof if you want, get a letter from the supplier that he has filed a return, do all the steps bona fide required, 16(2) is met.
Sir, the peculiar thing is happening like when we are importing anything, on the same they are charging IGST. And so related to that, the question is whether we can avail ITC on courier service, that is IGST paid for import of goods. The supplier is in the same state. So supplier of the services is also in the same state, whereas recipient is also in the same state. So can they claim the IGST credit?
But it is an import.
Yes, sir.
So see, what happens in courier is that the bill of entry is never filed by the importer. The bill of entry is filed by the courier agency. He prepares a consolidated bill of entry and files for the various packages and gives a list where he maintains the names of various people to whom goods are delivered. So now when you receive the goods which are imported, you will receive only a courier certificate or a letter from the courier. You may not get a bill of entry in your name. You may get a copy of the consolidated bill of entry with something, but that may not give you enough document. So my worry would be, what would be your document for availing input tax credit? Because the documents for availing input tax credit is also set out in the CGST rules. So the customs duty, if you're able to demonstrate that the duty has been paid by you through a challan, then the challan that is used for payment of customs duty can be a document as far as the IGST is concerned. But if you don't have that and you pay only the courier, then the courier bill, if it has covered totality, then maybe yes. But if the courier bill is only for the courier charges, then you cannot get the underlying IGST which the courier agency had paid.
Okay, thank you. Tapas bhai, next.
Yes, I think we have covered most of the questions in Zoom. No, I think there's
Okay.
one more question. In case of fire with GST, whether VAT also needs to be GST also needs to be reversed.
Sorry?
In case of fire, whether GST needs to be reversed.
No, in case of fire, I presume it is in the facility. If the fire has destroyed your stock of inputs or it has impaired your stock of inputs, warranting you to write off the inputs in your books, then you need to reverse the GST on such inputs.
Perfect. CA Jay Khona has asked in YouTube that, sir, after amendment of IGST Act, it will now not be possible to export on payment of IGST and claim refund. Is the understanding is correct? I can say
That is to be, no, partly true. Amendment has come, but the government will specify which all categories which are eligible and which are not eligible. That has not yet happened.
Yes. So still we can claim the refund in that scenario, right, sir? Mukesh Chaudhary has asked another question that for individual dumper, is that whether GST is chargeable on karting services provided to unregistered persons? Yes.
Not able to follow the question.
Yeah. I'm able to. Tapas bhai?
He has asked first question. I think that is in continuation. The first question is whether ITC on purchase of dumper is available as he is owning one more dumper truck for providing services of karting. That is providing sand after procuring sand from river and charging 5% GST. In that case, whether he can avail credit of dumper truck or not is what his question is.
Then we'll have to go deeper and see what is a dumper and whether dumper is a motor vehicle or not. That is a key question. That is an opinion.
So one has to dig in out.
Yeah, we have to go. We have
try
to see, how to understand Motor Vehicle Act for dumpers, look at the classification, look at the nature of activities, etc. It is an elaborate exercise.
True.
We'll wind up on that. Next speaker must have come. You have already crossed my time limits here.
No issue, sir, because the topic is interested, and as I said earlier, that to listen you is just like
I agree.
Vaccination for all of us.
I'm so happy with the warmth and affection that you show, but with due respect to my co-speakers, they should also not feel.
Yes, definitely, sir. So now I request CA Minal Buch to give well-deserved vote of thanks to Vaitheeshwaran. Thank you.
Namaste and good morning, everyone. Good evening, everyone. I am honored to have the opportunity to propose a vote of thanks. I would like to express our sincere gratitude to our respected Vaitheeshwaran sir for an excellent coverage to the topic of ITC in such a very short span of time. Also, sir has put a rest to lot of complexity arising out of ITC availment, utilization, non-availment through his legal perspective. Key takeaway which I have jotted down is, so we need to start thinking afresh and shaking off the legacy of the past. Glimpse of past versus present in the context of judicial precedents by apex courts in the matter of Sirpur, paper mills, etc. Impact of COVID-19 on ITC, housing intake and market, availment of the block credits on immovable property, and many more. I actually like the way sir has explained the fundamental principles of availing ITC, which has now empowered all of us to deal with the innovative arguments by departmental authorities and even resolving the issues faced by our clients. Harit bhai, Anjali ma'am, Bishan bhai, and dear friends, once again I would like to say that we are most grateful to sir. We thank you for being with us this evening. It's a great pleasure. Stay safe, take care. Thank you very much. Dhanyavad.
Thank you, ma'am. Thank you, Bishan.
Thank you very much. Thank you very much. And sir, waiting for you to come here and have that more wala karari roti.
The moment they allow everything and everything is free, I'll travel to Ahmedabad.
Great. Thank you so much. So now I guess we will be shortly joined with our CCM sir, Aniket Talati ji, who is going to give us a knowledge about various schemes under COVID-19 provided by the Institute of Chartered Accountants of India, and the members can be benefited with those schemes. So till then, let's have a biological break of say 2 to 3 minutes, and we all can stay tuned. And I also seen Venu ji, so we'll start the session soon. Tapas bhai, if there are any other questions on, like Chitrang bhai on YouTube said that, sir, why ITC on services are not allowed in case of refund due to inverted duty structure? There is a question on YouTube, but I guess that's why Honorable Gujarat High Court has said that yes, in case of inverted duty structure, refund of input service also eligible. Any comments on that, Tapas bhai?
Yes, sir. So what it seems is earlier there was a controversy before this amendment that they brought in and disallowing services. Initially when the provision was introduced, it allowed the refund of input in case of inverted duty structure. Refund was allowed only if your output was goods. Later on it was changed and they allowed this inverted duty structure in case of services as well. But they made a change saying that for inverted duty structure in case of goods, you will be allowed refund of only inputs that are there. Probably the intention of the government may not be that, or probably they wanted services to be out in, or probably they wanted the matching for inverted duty structure as to they wanted one-to-one matching. Whatever comes in and is manufactured or is traded or sold, probably they just wanted to give a refund of only those inputs which are directly having nexus. But as you rightly pointed out, the Gujarat High Court has read down the provisions to say that this amendment which says that input services are not covered is not a valid law so far as the definition of input tax credit covers input tax on goods as well as services. There is a contrary judgment by the Madras High Court on this, which has gone to the Supreme Court, and the Supreme Court has also issued notices to this judgment of VKC footsteps of Gujarat High Court. Let's hope for the best what the Honorable Supreme Court has to say on this.
Aniket sir is now here. So Aniket sir, welcome. And since there was a issue with Zoom today, many participants are on YouTube Live and are listening to you, sir. So as we all in Ahmedabad don't require any introduction of our beloved CCM Aniket Talati, sir, I request him to address the session. Sir, thank you.
Thank you very much, Bishan Bhai, Honorable Chairman of the branch, Harit Tariwal, Vice Chairman Bishan Bhai, Anjali Ben, Sunil Bhai, and all managing committee members, and all the participants who are attending this course on GST. Well, just to give you all a brief background, Bishan Bhai and the branch managing committee contacted me and were keen that there are certain benefits that are specifically be made available. And I will not call them benefits. It is in fact what the institute ought to be doing in such a difficult time, especially for our chartered accountant members who are facing a financial difficulty and crunch due to the circumstances. As many of you will be aware, the institute has the CABF, and through the CABF last year itself, it was agreed in the council, and then a proposal was moved to the CABF that how financial assistance can be garnered for all those members who require certain financial support for treatment. And we are all aware nowadays with the increasing hospitalization, such expensive costs which are there for not just hospitalization, but also the medicines, remdesivir and the other injections that are made in the market, how this cost can be reimbursed. And with this aspect, the CABF has come out with the policy. So I'll just discuss. I have a few slides on that maybe for a couple of minutes I would like to share. But let me assure all members that the council is working 24/7, specifically in these torrid times, to try and ensure what best we can do as a profession to help as a council, all members, the members in practice as well as in industry. 2-3 pointers that I would like to just mention here at the beginning. The institute, for example, has tied up with various service providers, specifically in the digital era, to ensure that how members can move their practices online. We are all facing frequent lockdowns, frequent restrictions in our movement. A lot of times there are deadlines which are coinciding, and sadly they are not getting extended, and therefore we have to work from home. And this work from home has become a reality. We have witnessed it last year. This is the second phase, and now the chief advisor to the government has probably indicated a third phase. So none of us knows, and I welcome our Honorable Chairman Harit Bhai once again. Harit Bhai, thank you for inviting me. None of us know when this pandemic can end, and it's a very sad state, but it's a fact. We do not know when this period will end, and I think the only way to counter it, to face it, and in our practice, especially when you are discussing GST, which is a lot of compliance related work also, we'll have to appreciate the fact that there is going to be a huge portion of our time, our staff's time, which is even more important, our articles, paid assistants, other qualified, unqualified people that we have, who will probably work from home. And in that perspective, the technological change will have to be made, and maybe permanently, so that whenever tomorrow anything like this comes up, you can move your office. In this regard, there is a website of the institute, which is CMP Benefits, Committee for Members in Practice. I would urge all of you to please go through that website. There are multiple products where are available free of cost to all members, where you can migrate your office. For example, even for the accounting, payroll, timesheet and costing purposes, or out-of-pocket expenses that you would wish to claim. The institute is tied up with Zoho, which is one of the largest homegrown bootstrapped startup, which is a unicorn by its own might. And these services are provided free of cost. The storage is there, the facilities are there. Similarly, with various practice management softwares, the institute is tied up, and they are all available free. The reason I'm mentioning it, because though the institute is trying its best, somewhere the knowledge is not there, not disseminated, and therefore not many members are using it. So one point was with regards to all of these facilities, and I'm sure the branch will also ensure that they get promoted, so that all chartered accountants, especially who are not able to afford expensive technology to work from home, they can start using these cloud-based products. The other only important aspect that I would like to share here, before you can all, again, I understand, would like to go back to the technical session on GST, is regarding the functioning of the CABF portal. And like I mentioned, the special financial assistance that is being granted specifically in the case of COVID. As you can see, the CABF portal was launched last year. I'm using that very slide that we used during the launch of the CABF portal. All of you have reached out to me. I am on a daily basis, recommending a lot of financial assistance, but still I feel many members who are actually facing financial difficulty, who have some loved ones, their parents who have been admitted, yet they are not able to get this benefit. I just thought it would be appropriate, since the branch is requested, to maybe give you a brief understanding of how it functions. I know some of you feel that institute has such a huge corpus by itself, which is nothing but the funds of our members and students. So it is not one particular person or persons which has any control over the fund, but it is our all joint funds. But the challenge is that the institute is not a society or a trust where we can spend money for, as we wish. It is governed by the Chartered Accountants Act of 1949. So any activity that is done will have to be qua the act. Second is because of the income tax exemption, which is enjoyed by the institute. Our coaching fees, our tuition fees, our examination fees, and even the membership fees, they are not chargeable to tax and given a Section 10 exemption. Because of that, the funds of the institute cannot be used directly for the purpose of our members. But I'm very happy to state that in these torrid times, we have approached the Ministry of Finance and the Ministry of Corporate Affairs, which is our parent ministry, to give us a special permission looking to these times to have certain funds which are with the institute to be used specifically for the purpose of this COVID and for the benefit of our members. In fact, I'll be happy to state that the CSR committee, where I am vice chairman, we have approved certain grants that we will be giving to all branches and regional councils for conducting plasma donation camp and also for conducting vaccination. So the expenses that they have to incur, they may not have to use the funds, but this will be done through the CSR committee. And second, with regards to the benefits that can be provided, just to take you through the presentation, the CABF is the Chartered Accountants Benevolent Fund. If anyone of you is not a member, I would request you, again with a prayer that you never have to use this in your life. But in case such a time comes, you should have the benefit of being a CABF. Some of you may have inadvertently become members. In the past, we've collected contributions from CABF on programs and deposited on your behalf. So if you have any issues, questions, whether you are eligible, please reach out to us and we'll be able to guide you. The CABF is established under the Societies Act of 1860. It is by the members of the institute and for the members of the institute. And the objective is very clearly laid out in within the deed that was created. It is to help the members, wives, children, widows, and children of the deceased. So not just while you are in existence, but if, God forbid, there is a death of a member, then the institute is supporting the widows and the children, and also relatives or others who are dependent on the members. So all of them are covered under the CABF's deed. The web link of CABF is available online. I would urge all of you, this is an initiative last year as the member of the Digital Reengineering and Learning Directorate. One has tried to move all the processes online. Even the entire process of CABF is today online. So not just your filing of the claim of whatever amount, your invoices of the hospitalization, your COVID positive report, all of the documents which are required, the income proof, the income tax returns, all can be attached online. The recommendation that is required also, you can just nominate and it will directly go to the computer email of the person as nominated by you. One is receiving on a daily basis a lot of these recommendations, and I make sure that by the end of the day, whichever recommendation is pending at my end, we are forwarded. I'm sure the chairman, vice chairman are also ensuring that they are processing these and forwarding it to the CABF. After which, this entire application is scrutinized by the CABF. Just to mention that this entire portal is linked with your membership database. So if you are in the SSP, you have your membership active, automatically it will get collated. You can apply. If you're not a member, become a member. And even for the applications that has to happen for the COVID assistance can be done online. The recommendation which is required is totally system driven. As soon as it is processed and the request is sent, it reaches our computer, the email is triggered. And when we log in as a recommendation, we can immediately accept. If there are some documents which one finds missing, it can be rejected and then sent back as an application. This then gets forwarded to the CABF. The CABF, after final approval, generates the office note and forwards to accounts department for payment. We have tried to expedite the entire process. It used to take a few months. Now it's in a few weeks that the process gets approved. This is an older slide, like I mentioned, but the fund, just for the knowledge of all members, is, like I said, run for the members, by the members. The president in office and vice president office are the managing committee of the fund. We have our senior past council member SC Vasudevaji as a member secretary, and other council members and chartered accountants from Delhi. Since the fund is registered there and the operations are from there, members from that region who are on the managing committee. Yet, like I said, it is not that they are going to, if all the documents are in order, we've also instructed and put in a huge office team which works on all of these applications. If there is a document missing, they immediately will get in touch with you via email. Phone call will be made. The documents once provided, the process gets moves forward and the payment is released. Like I said earlier, in the pre-digitalization era, this used to take a few months. Now the entire process is online. If you want to become a member of CABF and you are not a member, question may be, how do I know? You can email the CABF and they will inform the status of your membership. Like I mentioned, if not, if you wish to take it right now, a contribution of 10,000 is to be made to become a life member. Annual membership is at 1,000 rupees, which is in the form of a voluntary contribution. And to facilitate this fund, even just at the time of your paying your membership fees, this contribution can be paid. So it is not a separate portal you need to maybe go to. While you are paying your membership fees, just ensure that your CABF payment is also processed. Like I said, you can pay it with your membership fee. If you do not have not paid it at that time, you can go through the CABF portal at any time and become an enroller, become a member. The monthly assistance is right now in the range of 15 to 25,000. Like I said, the institute has approached the government to increase the corpus, and we are hopeful that this plea will be considered by the government, and then this amount can substantially be increased. In case of ex gratia financial assistance, and even for our COVID assistance, the amount is at 1,50,000. So that is the amount of benefit that the CABF or the claim that the CABF can settle. Very similar to how an insurance claim you would process, but of course, very fewer documents. You only have to go online. The entire procedure for filing the CABF assistance is given there. Like I said, we prefer it to be online. There is a form which is in circulation on WhatsApp, but no need to have the pain of physically going through the form. Simply, take up the online form, fill up all the details, upload all the documents, and the recommendation can be done online. Finally, I can only request those amongst here who are more financially, I can say, well-to-do, who have the resources. This is one fund which is working for the benefit of our members. You will be surprised that we have had members who have contributed not in lakhs, but some in crores to this fund, just so that our fellow fraternity members, our fellow professionals can benefit from it. And I think all of you will agree, whatever we are today, a large part of it is owed to our alma mater and to our profession. And therefore, if one has the resources, this is the time to help our professional brethren, not just professional brethren. I'm sure one can help the society at large, but once you have to go out and you have to limit the population of whom you can get involved with, I think our fraternity will definitely figure on the top for each one of us. So my urgent request to all of you, please contribute to this fund in the largest possible manner. And like I said at the beginning, this is one step. I know the pains of losing a loved one, the pain of having them gone through hospitalization is not measurable in any financial terms. But in these torrid times, when we are all facing financial difficulties in some form, the works have got staggered, they have got delayed for some of us. And some of us who have recently started our practice and are facing certain financial constraints and liabilities, I think for them it is very important to understand that this is what is available. And more importantly, the concept of CABF, which a lot of young members are not aware of. And again, with Harit Bhai, Bishan Bhai and the entire team, I'm sure we will popularize the CABF even further in the branch, in its activities. Because like I said at the beginning, and I will conclude with these words, the CABF is truly of the members, for the members and by the members. So please contribute generously, and whatever help required, you can reach out to any of us at the branch, to our regional council members or to myself, and we'll be more than happy to assist in whatever way possible. Thank you once again.
Yes, sir. Sir, regarding this medical assistance to COVID people, so sir, when the income is less than 10 lakhs, I guess hospitalization charges are being paid. So is it loan or it's just assistance? Aniket, sir?
Yeah, it is in the form of an assistance. It is in the form of an assistance.
Okay. So, and I guess hospitalization is required for that.
So with regards to the requirement of hospitalization, there has been certain questions raised, whether, for example, if the treatment was happening at home and no hospitalization occurred. The fund has, I think, taken a lot of views legally as well as internal discussions. And the current position is that only in the case of hospitalization is this assistance possible.
Yes, sir. Thank you. Thank you, sir. Now I request Chairman of Ahmedabad branch, C. Harit Dhariwal, to say a few words, and definitely well-deserved vote of thanks to our CCM. 1 minute, sir. Harit bhai, now?
Yeah,
Yes.
yeah, it's okay. Thank you, Aniket. And I also welcome the faculty for the session. Venu Gopal sir, welcome to the session. Aniket, wonderful listening to you as always. And today you spoke on a very relevant, a very important topic. Hence, we wanted to keep it today because we are getting so many calls by our members. I think you must be facing so many calls yourself also. So it's a wonderful initiative that we are, you are here to solve all the doubts, all your queries. I'm sure after this we are going to have many more members participating in CABF, and we at branch will be taking a lot of initiatives to make people aware of this wonderful initiative that ICAI has taken. And also thank you for sharing this wonderful initiative of CSR. I think the way the CSR committees is working for the benefit of the members is commendable, and especially the Zoho and the other software that you use, that you mentioned. I think I think at branch also we'll make sure that we make efforts of actually compiling all these things and giving it to the members, so they can also take the benefits of all the assistance that ICAI is giving. So thank you once again, Aniket, for sparing your time. I understand you were in a council meeting and you just came here for special address. Thank you so much for sparing that valuable time. And now over to Bishan Bhai for the GST session. Thank you.
Thank you.
Yes,
Thank you,
Aniket bhai, today is the World Thalassemia Day and Indian Red Cross Day also. And we at a branch under the leadership of Harit bhai was able to collect 30 bottles of blood, and we have donated that to the Red Cross, Indian Red Cross Society. So, Venu sir, we also celebrated this with such noble cause. So, welcome, sir. Yes, sir. Aniket sir, if you want to say something.
No, just excellent. I think under Harit bhai's leadership with the branch, the fact vaccination drives, the plasma drive, and today's blood donation, I think it is time that we are all considered financial wizards and thinking from the mind. This is the time to actually think from the heart. And I'm glad that the leadership of the branch is also keeping its heart above its head and serving with all its noble intentions. My best wishes to all of you. Thank you.
Thank you. Thank you very much. Tapas bhai?
Yes, sir.
Now I request you to introduce our learned faculty of the second session, CA Venu Gopal Gella from Bangalore. Venuji, welcome, sir.
Thank you, sir.
Thank you, Bishan bhai. Respected Chairman, sir, CA Harit Dhariwal, Vice Chairman Bishan Shah, and our dear faculty, Venu Gopal, sir. We welcome you. CA Venu Gopal Gella is a founder partner of Messrs. Venu and Vijay Chartered Accountants, which was established in the year 2002. His areas of practice include design and development of internal controls and process automation, consulting in ERP, implementation, migration, management consultancy for business analysis, and growth and design for management information systems. This is apart from his specialization under GST. He is a chartered accountant with a 45th rank in CA final. He's also a certified information systems auditor and has completed various courses from ICAI, namely DISA, Certificate of Business Valuation, Internal Audit, course on fraud detection and forensic accounting. Not only this, he has also completed one-year course from IIM on business analysis and business intelligence. Apart from audits, he is hands-on coding in VB.NET, R, Python. He also reviews database designs. I mean, this is something probably 0.1% of chartered accountants would even know what VB and .NET is. I am personally not aware. He is behind in the development and managing of cloud applications like TaxSmile, Insta Financials, and others, which many of us are acquainted to. He's an active speaker at the ICAI on GST, especially technology and its implementation challenges. He has authored various industry-specific handbooks on GST. He has contributed to the technical guides on GST audit released by the ICAI. He conducts workshop on full filing of returns with ease of automation. He's developed various Excel-based utilities on GST like JSON Reader, creating JSON files, validators, GST impact readers. In fact, one of his Excel sheets that I read is automatic downloading of the various notifications. You click on it and you get all those notifications automatically downloaded from GST's website. So that is really helpful and handy. He's also conducted workshops for various corporates on use of technology, improving efficiency at work using Excel, building automated reports from accounting and financial implications. I think Venugopal sir, with his impeccable qualifications on his knowledge of technology, I think he is the best person to take us through the nuances of 2A, 2B. We welcome you, sir, on behalf of ICAI Ahmedabad branch and all the participants. Over to you, sir. Thank you.
Thank you.
Sir, if someone has question, will you like to take on right now or after your deliberation?
Sir, I would like members to interrupt and ask the question as and when it happens, so that is maybe others can add on, because today's topic is pretty simple, straightforward, but it needs a lot of deliberation so that we are very clear in this. And I'm sure most of the members by now are aware of it. But yes, as a procedurally, we should be aware so that we don't give a wrong advice. Before I start the session, I congratulate Ahmedabad branch chairman for taking such a wonderful initiative on the blood donation and plasma donation related activities. And I thank Bishan Bhai for inviting me as a speaker, because in my personal view, he himself he can handle any of the topics, but he would like to give different flavors of the experience from across India, so he gets the speakers. But Ahmedabad, Gujarat is also another knowledge hub on GST, is what I would say. On this note, let's begin the discussion. The agenda is discussing on the compliance relaxations in the return filings, the refund related and other procedures which have been recently given. Of course, any other topic relating to that we can add on. Starting with the return filing procedures, there has been a relaxation in the due date for GSTR 3B. Now, this is only owing to COVID, the changes that have come, the relaxation that has been given. Firstly, what is the due date for filing GSTR 3B? अगर हम टर्नओवर 5 करोड़ के ऊपर से देखेंगे तो मार्च का 20th April है, अप्रैल का 20th में. And if the people who are less than 5 crores, I am not talking about quarterly filing, I'm talking about monthly filers. So we have Group A states, so North India and the downside of India, there is a segregation. So Group A states, the due date is 22nd September, and Group B states are 22nd of next month and 24th of the subsequent month. What is the relaxation which has been given for COVID? The answer is nil. So owing to COVID, there hasn't been any relaxation that has been given for the purpose of filing due date of GSTR 3B. GSTR 3B, there is no change in the due date. Agar relaxation nahi hai, to kya, what is that the benefit they have given? They said, okay, I am not going to charge any late fee.
Sir, your PPT is, I guess, not visible. If you can check it.
PPT is not visible.
Yes.
Is it visible now?
Yes.
Yeah. So what is the relaxation they have given? They said the due date I am not extending, but if you are filing late, the late fee I am waiving off. Now, what is the late fee? We know agar kuch transaction hai, so it is 25 rupees CGST, 25 rupees SGST per day. If it is nil written here, so 10 rupees, 10 rupees. Now that's the late fee which we have to pay. So the government said that, okay, the original due date for more than 5 crore SSCs is 20th April and 20th May. For up until 5th May, which is from 20th April, they have taken 15 days relaxation. And for 20th May up until 4th June, which is again a 15 days relaxation. So I'm giving you a 15-day relaxation window for not charging the late fee. So due date did not change, due date stands intact. It's just that the late fee is waived off. For a small taxpayers, where if they are filing under different the states, it could be 22, 24, whatever the dates, that has been given to 20th May and 19th June. A QRMP, for the first 2 months, he will just make the payment of tax. In the March month, he will file 3B. The March 3B, the 22nd, 24th due date has been relaxed to the 1 month later. So till any time you file up until 22nd, 24th of May, you do not have the late fee. Please note, there is no change in the due dates. अगर ये time तक आप file कर दोगे, आपका late fee waiver हो गया. Now, what is this logic of 15 days? I don't know. Maybe they are thinking that if someone is falling sick, they would recover in 15 days. तो वो 15 days के अंदर तो भर देंगे, तो 15 दिन तक ही मैं relaxation दूंगा, उसके बाद I will not give the relaxation. Now what happens with the interest? चलो late fee waiver हो गया, but interest का क्या होगा? So even interest, they said that okay, large taxpayers, I will not give any waiver, but I will give relaxation. पहले 15 दिन का जो फाइल होता है, you calculate interest at the rate of 19%. उसके बाद का जो पेमेंट करते हो, 15 दिन के बाद जो रिटर्न फाइल करते हो, 18% के हिसाब से कंप्यूट करके फाइल करो. जो less than 5 crores वाले हैं, which are small taxpayers. So the logic is small taxpayers do not have a bandwidth. There is only one person doing. Large taxpayer कोई तो रहेगा उसको संभालने के लिए, तो क्यों हमें उसको waiver दे. Now for a small taxpayer, first 15 days it is nil. उसके बाद का 15 देना, it is 9%. Thereafter it is 18%. So whether it is a QRMP scheme, whether it is monthly filing but less than 5 crores, whether it is a composition dealer, for all of them, the relaxation is same. First 15 days, no levy of interest. Later 15 days at the rate of 9%. Uske baad 18%. So notification 8/2021 Central Tax has given this relaxation. Now, what is that? One should be careful. One should be careful about this turnover of 5 crores, because we generally we know, okay, ye small dealer hai, ye big dealer hai, we keep it in the mind. But here the one point you should be noticing is we are talking about relaxation for the month of March and April. Someone would be a small dealer in the month of March, his turnover is less than 5 crores, because the turnover is always considered preceding financial year. Whenever we talk the base turnover 5 crores, हम पिछले साल का बात करते हैं. So when I'm talking about the turnover for the month of March 21, I am talking about the financial year 19-20 turnover. And when I'm talking about April, so for understanding which category the SSC falls in, whether more than 5 crore, less than 5 crore, it has to be independently applied for both the tax periods. This is one mistake which might happen or which will happen. So it could be vice versa. Earlier, he might be a large taxpayer, but this year, owing to COVID, business is down, he would have become a small taxpayer. It could be anything vice versa, but please apply this provision independently each of the month. This is one common mistake that might happen. This is with regards to GSTR 3B. Now, what is the relaxation that has come for GSTR 1 and other procedure due dates? Any doubts on GSTR 3B for anyone so far? If you have a doubt, you can put it in the chat or we can ask the question. Okay. So we will move to the other things. Now, this has the relaxation has come by way of multiple notification. Okay. No problem. First, GSTR1 for the month of April. 3B, we have seen March, April, but GSTR1 relaxation is only April. The original due date is 11th May. Again, 15 din ka relaxation. So, 26th May. You can file your GSTR1 on 26th May. So, till 26th May, if you are filing, there is no late fee. Is there an interest for GSTR1? Answer is no. GSTR1 का liability तो बनती नहीं है, वो अपने आप 3B में जाके तभी liability बनती है. Late filing of GSTR1 will only indicate late fee but not interest. So 15 दिन का relaxation दिया हुआ. Is it for May? Answer is no. It is only for the month of April. Then the composition dealers file annual GSTR4 annually. Though the word used as the annual return, but I would say the composition return filed annually. So the composition return which is filed annually for the period April 20 to March 21, the due date filing is 30th April. So it has been relaxed till 31st of the May. Then ITC 04. This is something which is very neglected return. Why it is neglected? Because ना तो इसका लेट भी है ना इसका इंटरेस्ट लायबिलिटी है. For some reasons, most of the manufacturers choose to ignore or not file ITC 04 in spite of the advice given by the professionals. In fact, many of the professionals who are not full-time into the GST compliances, they are not even aware that there is a return called ITC 04, which a manufacturer or the job worker for the movement of the goods, because that is reason other than supply, section 19 read with 143. So we have to, we will move the goods, but it is under delivery challan. So ITC 04 has to be issued. In my personal view, it is recommended that we educate all the SSCs and taxpayers that please file ITC 04 in our interest, because we will know whether if the goods are not returning within the sufficient time period, that is 1 year for the inputs and 3 years for the capital goods, then it becomes deemed as the supply. There is a question from Ketanji that we have seen that the portal is considering financial year 2019-20 turnover for opting into the frequency of return file Q1 and Q2. So the answer, I would say that you have a choice. You have a choice to switch over. If it is less than 5 crores, you will voluntarily declare. You will choose whether you want to be in a QRMP scheme or not. If it is more than 5 crores, there is no way that you will be in the QRMP scheme, but you have a choice whether you want to be a QRMP scheme or the regular scheme. You can mention it, even though the portal is giving, it is an approximate turnover which the portal has calculated, but you can change it. The next is IFF, which is Information Furnishing Facility. So the people who are under QRMP scheme, earlier we knew that the GSTR1 could be filed on a quarterly basis and GSTR3B on a monthly basis. But now there is no vice versa. Either if you are in a quarterly, then 1 and 3B is quarterly. If you are a monthly, then 1 and 3B is monthly. There is no way you can mix up and create a new combination. If you are in a QRMP monthly payment and a quarterly scheme, for the first 2 months you will file IFF, and the third month you will file GSTR1. Likewise, in the first 2 months you will file the PMT06 payment challan, and then the last month you will file GSTR3B. So payment challan is only a blocking of the cash. You will be utilizing that in the GSTR3B in the subsequent quarter. So GSTR3B will have full details. Contrary, IFF is given to facilitate the recipient taking input tax credit. So IFF will be there on an incremental basis. So my turnover for the month 1 is reported in IFF. My turnover for month 2 is reported in IFF. And in the third month, while reporting my GSTR1, the details of IFF is already there in the GSTR1. I need not report again in GSTR1. Contrary, GSTR3B is for the full quarter, you will be showing the turnover and liability. Then the relaxation for NRTP, ISD, TDS and TCS returns. Non-resident taxpayers, both March and April return has been extended till 31st May. ISD is extended till 31st May. TDS and TCS is extended till 31st May. So the other returns have been extended almost till 31st May of the month. So question from Kartik ji is, अगर GSTR1 का date बढ़ गई है, तो 2B should it be taken as per the GSTR1? A literal reading of the GSTR2B, the values that has to come from 2B is not 11th and 13th. 11th for GSTR1 filers and 13th for IFF, midnight of 13th. So on 14th, GSTR2B gets generated. On midnight, GSTR2B gets generated. And that is the value which has to be considered for the purpose of input tax credit. However, in my personal view, I have doubt whether GSTN will make these changes. So they have given a relaxation for input tax credit because the 2B date should also be to 26th May. So they gave a relaxation to ITC Availment Rule 36 sub Rule 4. I missed the wonderful deliberation of Vaitheeshwaran sir, but thankfully this is on live YouTube. I should be watching his discussion on the input tax credit. Now, what is the issue we have here is we know that the input tax credit should be taken basis the not my books of accounts, but whatever which is visible in the portal. A quick question to the members. Can you put your answer in the chat? What should be basis of my input tax credit? Should it be based on GSTR 2B plus 5%, or I am filing it on 20th? I will find all the values which are there in my GSTR 2A plus 5%. Would it be 2B plus 5% or 2A plus 5%? What do you think? Hemil Bhai says 2B. Does anyone feel 2A? So Harshit ji said 2A plus 5%. Arpit says 2A plus 5%. Monica Man says no, it is 2B only. Let's see other views. And there is no right answer, wrong answer. Please put your view. Okay. Now, let me give you a controversial statement. The controversial statement is all the answers are right. 2A is also right. 2B is also right. ऐसा कैसे हो सकता है? Is like दोनों में से एक ही होना है. The right answer is the values of 2A up until 11th is what you have to consider. But हमारे पास जादू की कुछ चढ़ी नहीं है so that कि इस पोर्टल से अपने आप हम डाउनलोड कर सके कि midnight of 11th को हुआ या कब हुआ. So just to facilitate the taxpayers, the government has now given 2B. 2B is a cutoff date given by the portal. So if you have an ability to extract 2A values, because GSTR1 corresponding data is GSTR2A and not 2B. If you have ability to extract 2A exactly midnight of 11th, you can take 2A. But that is what government is doing for us. So that is why we take it on 2B. Now, if 2B is the basis, so now I'm concluding it as take 2B as the basis and take input tax credit. So the next question to everyone is, if 2B is the basis, can I now say 2A is an irrelevant document? Can I say do not even ever look at 2A because 2B से ही आपका ITC चलती है. So 2A is not relevant. Can I say that? Okay, Praveen ji says no, 2A is relevant. Okay, so substantial members feel that no, 2A is also relevant. देखते हैं कि 2A कैसे relevant है. अगर 2B is the one data which I am taking input tax credit month over month, साल भर का मैं 2B से ही लिया हूं, तो 2A का वैल्यू कहाँ जरूरत पड़ेगी? So anyone can unmute yourself and you can answer this question, or you can put it in the chat that why do you think 2A is relevant? Is there any relevance of 2A after 2B being into the place from the taxpayer perspective? And by the way, table 8A of GSTR 9 would also be matching to GSTR 2B. So why do you think that 2A is relevant when you are not using it for basis for input tax credit? Okay, at least I have one support. Rajendra ji says, "Acha, chhod the 2A is not relevant." Manan Shah ji says कि दोनों को reconcile कर देते हैं, 2A को 2B को दोनों को reconcile कर देते हैं. So Harshit ji says 2A is equal to 2B at the end of the year. Answer is no. It is 2A and 2B will never ever match. It will be matching on a longer horizon. When I'm saying a longer horizon, so intermittently there would be years that would be coming in, but 2A and 2B will never match. If I draw a graph, if I have to draw a graph about 2A and 2B, if I say this is my 2A line, my 2B line will be like this. It is coming and going, but at sometimes it may match. But when it is matching, my financial year might end here and the financial year is ending here. Now, in this intermittent period, my 2A and 2B might not be the same figures. So 2A and 2B at the end of the year will not match. Okay. I will agree with Manansha ji that दोनों को उठा के reconcile करते हैं. When both the statements are coming, what is it relevant for reconciliation? By now you all aware that the 2A, the values in 2A are linked to GSTR1 period. Are linked to GSTR1 period. The values in 2B are linked to GSTR1 filing date. GSTR1 filing date. Now, we have seen the relaxation that is given for GSTR1. Let's take the month of April. My original due date is 11th May. Now that is relaxed to 26th May. If someone is reporting it in 11th May, it will be appearing in 2A of April. It will be appearing in 2A of April. If someone is reporting on 26th May, still it will be appearing in 2A of April. Irrespective when I file, it will be coming in 2A of April. But in this case, my 2B, if I look at my 2B, if I file in April 11th May, it will be coming in April. But if I file on 26th May, then it would be coming in the month of May. It will be coming in the month of May. So, for the purpose of reconciliation of my credits with books of accounts, generally on an accrual basis, I record my purchases month over month. It's difficult to reconcile a large set in tandem. April महीने का 2A, April महीने का परचेज रजिस्टर मैच होगा, बट April महीने का 2B मेरा April महीने का परचेज रजिस्टर से मैच नहीं होगा, क्योंकि कुछ परचेजेस जो April में किया हूं वो May का 2B में रहेगा, जो परचेजेस में मार्च में किया हूं कुछ सप्लायर ने लेट फाइल कर दिया वो अप्रैल का 2B में रहेगा. 2B you can consider it only for the purpose of, that is why in my first statement I said both 2A and 2B are correct. My 2A plus 5% at the 11th cutoff is what I have to consider for my input tax credit. I have to consider for my input tax credit. So I would say for the purpose of reconciliation with the books of accounts, you use your 2A only. But for the availing of input tax credit, you look at, मान लीजिए ये महीना मैं अपना books को जब देखूंगा 3,60,000, it's a, let's say we have the input tax credit in the books of accounts, and in my 2B it is showing 3 lakhs is the total eligible credit. So अगर 3 lakh eligible credit वहां पड़ी है, तो you will be taking 3 lakhs plus 5%, which is 3,15,000 as the credit for the month. And if someone is good in bookkeeping and reconciliation, they will carry over, okay, इतना credit जो April का लेना था वो छूट गया, May महीने में लेना है, so they can map the electronic credit ledger of the government portal and the credit ledger which is maintained in the books of accounts. So I would say that please use 2A for the reconciliation, 2B is only for computation of your limit. Now, Gupta ji says that department is asking to follow only 2B, otherwise department may issue notice if 2B is not followed. Even we are also saying, madam, that the 2B is the basis for the availing quantum of outer limit of the credit, but for the purpose of reconciling whether such vendor or supplier has paid the taxes or not, it is only 2A. In fact, I have recently built a small tool for the users of the Tally. If time permit, not now, but some other session, I can walk you through that how controls you can build in your books of accounts, wherein that you will be able to see when you look at that purchase entry, whether that exists in 2A, whether that exists in 2B, before you make the payment with a different color combination. Is it an item only in the books, or there are items only in the portal which is not matched? All that information you can see in the books of accounts and take a calculated call whether you want to make a full payment or you want to withhold the tax amount and you will pay the tax amount only when it is appealed. All those things you should be building in your books of accounts. Friends, I am big advisor of technology. I always say use some technology. In fact, at the end of the session, I will again talk about this. Coming back to the availing input tax for the month of April. अगर supplier ने सभी लोग May 26th में जाके April का रिटर्न भरेंगे, मेरा 2B में तो 0 आएगा, तो कैसे मैं input tax credit लूं for the month of April? So the government said, अच्छा, don't worry, April and May दोनों जोड़ के. In fact, last year we had the same issue from January till August. They said combine and you check that in the month of September and you take it. So the same thing is given for April and May put together. Now, if your May GSTR1 for again by virtue of one notification gets extended, the rule 36 will automatically, not automatically, again they should naturally extend for one more month, because your the credit is an input tax credit would be 1 month later. So for the purpose of ITC, April and May put together, you will apply rule 36 sub rule 4.
Sir, there is one question.
Yes, sir.
Regarding auto population of ITC data in 3B. So auto population of ITC data in 3B amounts are shown in ITC reverse step. How to reconcile or deal with that issue?
Okay, this is a good question. Now, GSTR2B, let's understand the GSTR2B. There are only majorly 2 items you should understand in GSTR2B. One item called eligible and ineligible. So in your GSTR2B, you have the credits that are coming. Some are marked as eligible, some are marked as ineligible. In fact, first time when someone saw ineligible, areva, so is it government doing some intellectual saying that a ineligible credit? And because for us ineligible credit matlab T1, T2, T3 or D1, D2. in a cryptic language, or 17 subsection 1 used other than business, 17 subsection 2 exempted, or 17 subsection 5 blocked credit. These are only ineligible credit. 2B में ineligible credit and इसका कुछ ताल्लुक है ही नहीं. In 2B, when it says ineligible credit, it is saying ineligible on multiple counts. You are in the state of Gujarat. You are traveling to Mumbai and staying in a hotel. You know the place of supply in case of an accommodation service is where the property is situated. So the hotel will issue an invoice with place of supply as Maharashtra with CGST and SGST of Maharashtra. In your 2A, it will be appearing as the hotel has paid you. Even in your 2B, it will be appearing. But for 2B, it will be treating as an ineligible credit because the place of supply is not the state of Gujarat, it is state of Maharashtra. The second thing, someone has not filed his GST returns, GSTR1, for the financial year 2018-19. I'm talking about financial year 2018-19, जो September 19 में फाइल करना था, September 20 भी हो गया. आज की तारीख में in the month of May 21 someone is filing their GSTR1. When someone is filing in the month of May, it will be there in the 2-year respective month. It will be there in 2B of the current month. Even though it is there in the 2B of the current month, that okay, so much credits have come, it will all be marked as ineligible. Even though the credits are coming in 2B, they are segregating based on the time limit or some conditions that itna credit aapko milega nahi. They are not talking about blocked credit or other things. So these credits are not to be considered. Then the second thing which you should know about the GSTR 2B is positive amounts and negative amounts. The negative amounts are the amounts to be reversed. The negative amounts are the amounts to be reversed. Now, what is this concept of negative amount? Let's say I have made a supply to you. I have made a supply to you, 10,000 rupees, 1,800 is the tax liability. By mistake, I have reported it as 1,18,000 as the tax liability. April month में आपका GSTR 2B में आ गया है, आपने क्रेडिट बिल ले लिया है. उसकी गलती मैंने मई मंथ में देखा. So in my May GSTR1, I went to table 9, amended my invoice, reduced from 1 lakh and I made it to 10,000. So it is like instead of issuing a credit note, I have made an amendment. I have made an amendment because it was a wrong value reported. What happens to your GSTR 2B? In your 2B, assuming in that month there are no other purchases that are there, so this delta of B2B amendment, would be coming as a credit item, would be coming as a negative item. Let's see if I have. Okay. So I am just copying and sharing a small logic. What comes in your GSTR 2B? This is cryptic. Let me explain you. So what you are seeing is delta. That is where I have written as B2B is the original purchase. CDN is a credit note and a debit note. CDNA is credit note amendment. B2BA is B2BA amendment. So whenever this delta is coming, so in the next month it is becoming a negative item. So it will go because I cannot report a negative value in 4A5, it will be reported in your 4B2. It won't be reported in 4B1 because that is on account of application of rule 42 and 43, which you have to manually correct. Next item. I have sold you with 10,000. I reported 10,000 only. But you have returned the goods in the month of May. I issued a credit note. It's not an amendment. I issued a credit note. In the month of May, for you, you do not have a credits. You have a credits to be reversed. Such reversals again will come under 4B2. That okay, these are the ITC that you need to reverse. So this is a logic that have built by the system so that they can reconcile it well. Please note, this is the same logic which is linked to table 8A. You should be using the same logic methodology for finalizing your returns. Hope this answers Bishan Bhai.
Yes, sir. Yes, done.
Now, so what is the challenge in vendor filing GSTR 1 late? That is after the to be date. The recipient who is filing complaint. माने recipient do not want to file to GSTR 3B late. वो 20 तारीख को अगर फाइल करना चाहता है तो he will be taking credit as per the books of accounts. But the issue that would come is जितना क्रेडिट उसने अप्रैल महीने में लिया है, अगर अप्रैल और मई मंथ की 2B प्लस 5% जोड़ने के बाद भी अप्रैल में ज्यादा लिया है, then he has to reverse this credit manually. So in the month of May, he will not be availing any credit, even though there are some items in 2B, and on top of it, he will be reversing it, the extra amount that he has taken. Then the next relaxation that have come is the time limit on the period of limitation, the extension. So whatever other than filing returns, whatever things to be done, what are the from the officer perspective kya karna hai? Either an assessment scrutiny notice, maybe section 60, 61, 62, whatever, best judgment or any of this. So he has to issue a notice, or he has to take some actions, whatever be the actions. From the SSC side, he should be filing a reply to a notice that has come, all those things. So whatever the due dates which are falling from 15th April to 30th May, ये बीच का जो भी मैं रिप्लाई करना है, अगर मैंने किया नहीं हूं, the due date of that will be 31st of May. Whatever the action I have to take, or whatever the action the officer has to take, such actions have been deferred up to 31st May of the next month. That is what, which is the current month, that's the deferment happened. Now, this is not unanimously applicable to all the transactions. From the SSC side, if he has to pay some tax owing to time of supply, he has to issue the tax liability computation for that month. He cannot defer it. Issuing tax invoice, it's like he cannot say my activity which I have to do, I'll defer it to 31st. No. The composition dealer, uska turnover बढ़ गया है, वो regular dealer बनना है. So he has to do it. So application for registration, I was not liable for registration, now I am applying. So uska date भी बढ़ा नहीं है. 1 3B late fees, these are all we have discussed. So that has got nothing to do with this notification 14, has got nothing, no impact on these things. Then from the officer side, if there is a serious offense and owing to section 132 and it demands an arrest, so that continues. Liability to partners of the firm paying taxes would continue. If I am not complied with any procedure or the penal consequences given under section 122, agar wo nahi kiya hu, even that continues. E-way bill nahi banaya hu, so section 129 penalty continues. So these are the procedures not relaxed. So this again you have to advise to the clients that you find a way, this relaxation did not happen, they have to continue. Then comes refunds. Let's look at registration. Registration, whenever I make a registration, see, we know this process that, okay, I make an application within this date, assuming if it is Aadhaar verified, I uploaded everything. So he has the 4 working days he has to upload. So we have the whole chain before he issues REG 06. So all this, the compliances falling from 1st May to 31st May has been extended till 15th June of the current financial year. Then in terms of refund, either approval, rejection, whatever it is. So whatever the timelines that fall in, 15th April to 30th May should be concluded by 31st May or 15 days from this due date, assuming something which is to be falling on, I have applied only on say 30th May, it cannot become 31st May. So whatever the time limit which is there, so plus 15 days. So that's what they have given, outer time limit. So 31st May or 15 days from the due date, that the whichever is later, that would be the due date for the proper officer. So which means you can expect the refund applications would be delayed and the clients has to be educated that, okay, thoda time lagega. It is not that 90-day automatic, which assuming जो 15 अप्रैल को था वो 31st मई को बन जाएगा. आपने say in the month of February, March आपने apply किया था, but procedural complaints which falls due say on 15th April, so that will now become the 31st May. Question from Tarang Bhai is, if the due date is not extended, only late fee, whether department can suspend e-way bill if March and April not filed on 20th May. A very valid point. I want everyone to know that today the blockage of e-way bill portal, suspension of the registration is happening automatically. Unfortunately, department department has powers to do it, but they might have to we might have to wait and see. But definitely they would when the time limit they have given the relaxation, so they will wait for the time limit to open. After the time limit of the latest interest, the relaxed interest period, uske baad bhi file nahi hua, tab jaake they would be blocking it. Then certain very minor procedural changes in IGST. So they have given a relaxation on exempt of IGST for certain goods which have been imported. Only list of goods on the conditions, certain conditions, because now this is really pandemic. You might be knowing that everyone are looking for ventilator, oxygen, remdesivir injection. All these people are looking for. And there are a lot of NGOs, trust. Even we Chartered Accountants Associations, we are pooling money. We are seeing if we can get some concentrators, we can get some medicines from our sources and distribute it. So the government said, if something is procured for distributed for free of cost, and on submission of a certificate that these goods are meant for free distribution, which is issued by the nodal authority. Now, not necessary that it has to be immediately. So a statement which which can be produced within the time limit saying that this is free. Now the GST on import is relaxed. Please note, this is you have to specifically see they have given the chapter and the explanation. So these are all COVID related the implications, which is a remdesivir injection or medical oxygen or oxygen filling systems. All these are the description of goods which if anyone is doing it, they can avail this beneficial, provided it is not purchased by a dealer. If it's purchased by a dealer, this beneficial exemption will not be applicable. They could have, Rajendraji says they could have waived off, but so we can't really do. So these are all the items which are there in annexure. Now, with this, I come to the last part of my slide. My presentation is what is that you should be looking for. Whatever we have discussed is just April, May. I'm sure you might have been heard that the third wave is due somewhere in October, maybe November, September, whatever be the timeline. You all know today vaccines are out of stock. Even those patients who have to get their second dose done, that is not available. So 18 plus, if you look at the people in this participants in this group, only 50% would have got vaccinated, 50% wouldn't have got vaccinated and waiting for a vaccine to be made available. The US vaccines are under the trial getting approved. Sputnik just launched, so we don't know, maybe continuing April, May, June, July, August. So if all goes well, my gut statement, so July is when we can consider something is available for consideration. So why are we discussing that? Most of you would have started working from home, especially those areas where the lockdown happened, started working from home. So you would have found a VPN system connected in the office server so that staff can remotely work, or you would have loaded your Tally or software data to Amazon, you can work remotely. But what about the clients? Agar unki books of accounts are not ready, you will have an issue. Or you have one or two staff who is working under doing these compliances. Fortunately, if you have buffer, good. But unfortunately, if you do not have any buffer stock, other than that person, no one knows how to file GSTR 1 or 3B. Honestly, you and I, we do not do that work. We have reached a position, we can advise, guide. Agar data aane ke baad review karke, everything is okay. There is a juniors who are the one who are doing. Even there are 2 levels, 3 levels. So they are doing. If there is a dependency on staff who is doing the compliance work, if something happens to them, because you have noticed the due dates have not been extended, only 15 din ka relaxation mil gaya. What would be the pressure, the mental agony on the person? If someone is COVID infected, he is looking for a bed and other things. On the other side, it is there is a pressure from the client or the officer. Ye kaise hoga, kaise karenge? In fact, one good thing in Bangalore, couple of CA firms have voluntarily offered, saying that we will help in filing the compliance, maybe TDS, GST, whatever be the compliances under different firms. They said if you are excessively dependent and something needs, we will support. But unless you create that support system, you will have a challenge. If you are using a desktop application for filing the returns, and those applications are not available for work from home, so you will have an issue. Then there are sectors who are continuing in this turmoil and they are huge issue. Hotel industry is down, travel industry, restaurant, real estate, the retailers, small manufacturers, most likely they will like shut the shop. They'll say there is nothing I have to pay. I cannot do, I am doing a very small meager turnover. Now you cannot say, sir, even though you are doing a meager turnover out of your purchases, you are not making a purchases, you cannot defer the liability. Jo mahine ka wo mahine ka, even if he is making a sale of some 50,000 ka sale hai pura mahine mein, still he has to end up pay that 9,000 GST. He is paying, even though he is selling it from the stock. He cannot surrender his registration. So you got to be careful of it. Even more, you got to be careful that we have the September cutoff. So credit notes have to be issued by September. GS tax audit, ROC returns, finalization of accounts to be done. Financial year 2021 GSTR 9 will continue. So you have to finalize your accounts for that. And you have to do this ITC reconciliation so that intimate your suppliers well in advance ki by at least by September, please deposit kar do, varna hame dikkat ho jayegi. So you got to be doing a much better planning and start adopting technology. Now, it is costly to look at different softwares which are on cloud or various things, but I would suggest use some technology where you can find a way to start working from home. We offices were never designed for working from home. We have to visit the client place, look at the documents and various things. Start finding a way. Otherwise, we will be doing an SOS calls that, okay, how do I handle this client? And kuch clients aise rahenge ki, sir, I cannot even pay late fee or interest. Aap kuch bhi karke close kar do. So these are the practical on-ground challenges that are going to happen. So on this note, I hope that everyone stay safe and take care of the family members. Though these are the compliances which we are doing for clients, and kuch logon ka iska ye roz ki roti ho jayegi, but still find ways to ease the mental agony and balance your personal life and professional life. So with this, I have come to end of my session. So if you have any questions, we can discuss the questions.
Yes, Venuji, I guess there are some questions in Zoom.
Yeah.
So if you want to take it.
Yes. So Naveen Bhai ka question is, this is a temporary solution. Date extension is not the remedy like oxygen. I agree. This is a diplomatic statement. Honestly, you and I can discuss, but maybe the council has to take a little liberal and bigger view, especially protecting the small traders. And today, if you notice who is flourishing, all the small shops have been shut. So if you need any grocery, you're going to Big Basket. You want some item, you're going to Amazon. None of these stores are now online, or they have geared up doing online. So there are challenges. Businesses are going to shut, and India backbone is all the small traders. So maybe the associations have to take up this matter with the GSTN and see how a larger benefit that can be given for these associations.
Yes. Is there any question left, sir?
No,
I
all the
guess.
questions
Okay.
are
Okay.
answered. In case if there is, you can.
Yeah, on YouTube there is one question that can QRMP scheme be changed in between a financial year or at the end of particular quarter?
Yeah.
Your
So
views?
QRMP scheme can be changed end of the quarter till end of the month, assuming for the month of April, May, June. Earlier you are in QRMP, you choose not to be in QRMP. Before the beginning of the May, you have to opt out of the QRMP. So the decision for QRMP has to be taken on a quarter over quarter.
There is one more question in Zoom, if you can.
Yeah, and a government contractor engaged in construction of road of various government departments like PWD, etc. The department is registered for TDS registration under GST, not a regular SSC. Whether supplies to this department is B2B or a B2C transaction. A very good question, sir. Earlier, GSTN portal was not allowing to enter the TDS registration number. But again, this somewhere last year, somewhere around Jan of the last year, this was changed. The GSTN portal will accept this as a B2B regular transaction. And for the purpose of e-invoice, also you will be using TDS registration. So you will be reporting under 4A and not reporting under table 7 of GSTR 1.
I guess.
Hirenji
Yeah,
says
Hiren.
it is not accepting. Sir, I would request you to try. It was the scenario earlier. Today it accepts. So if you're still getting it, just share me that number. Maybe there is a government department, you all know. I'm not here to comment. They file returns, they're late, they give all the wrong data. So maybe that tin itself would have been cancelled. Today, the biggest issue happening in the e-invoice scenario, suddenly the GSTINs are getting cancelled. In my personal, in fact, this morning I had a session on the e-invoice. In my personal view, if I'm the supplier, I'm making a supply to a person and that person's registration is cancelled. It is none of my business to say that, okay, I will remove it and I'll now e-invoice is not applicable, because only when I'm pushing the data to the portal, it says not applicable. Then the customer will come back, "Nay, I have updated, I filed the return." Then I have to go to the NIC portal and enter the GST number and say sync with the GSTN data. Somewhere the businesses also should be allowed to do, they shouldn't interrupt in certain procedure aspects, because at the backend system can take care of various things. So even here, the department GSTN might have been given wrongly in my view, Hirenji. Prakashji is share the 2A 2B tally software utility as told. Prakashji, I will do a video recording and I will be sharing it with Bishan Bhai as to how to use that and how it will fetch the data. Sure, definitely in 10 days time I will share a link for it. And I should also thank Bishan Bhai for accommodating the change, because I had another session and it was an overlapping the thing. So thank you, Bishan Bhai, for accommodating the change and inviting me. As I said that there are knowledge bank there in Gujarat, but considering me just to be there is it is my opportunity, and thank you. Ahmedabad branch, the chairman, and all the organizers.
Thank you very much, Venu Bhai. I am also thankful to you also, you and Aniket Bhai. Aniket Bhai has taken the time, and we can able to give the knowledge of CADF to all our members. So everything, was adjusted, and that's why we say that there is a supreme power who help us when we want to do right thing in a right perspective. Sir, thank you very much that you have given your time, your knowledge, and now I request Yash Parikh to give a well-deserved vote of thanks, who also run the PPT for Vaitheeshwaran, sir. So Yash, thank you very much for that task also, and please, now you can present the vote of thanks.
Yeah, thank you very much, Bishan Bhai. So on behalf of Ahmedabad branch of ICAI and all the members present, I thank Venugopal sir for having this very interactive session, a short and sweet session covering various practical aspects of reconciliation of ITC with whether to reconcile with 2A or 3 or 2B, considering various legal time limits which are extended under GST law, and the areas which we need to take care going forward for closure of 2021-22. So which aspects which need to be considered going forward in this pandemic time. So thank you very much once again from my side.
Thank you.
Thank you. Thank you, Yash Bhai. Thanks, Naveen ji, who connected with us from Indore, and all the participants who are watching us on YouTube. We at Ahmedabad branch wants to give more and more knowledge to all the members and participants. Thank you very much. We are ending this virtual meeting here. Thanks for the game.
Thank you.
Stay safe, stay healthy.